Still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
means
to a layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
You had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, you know, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, you know, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member, and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from our Bloomberg Interactive Brokers studio, also my home in New Jersey, streaming on YouTube. It is Tuesday, October 27, 2020. Carol Masser along with Kaylee Lyons. And Kaylee, safe to say tech dominating our headspace again today in a big way.
Yeah, in a big way. You got deals, you got earnings coming up after the bell. All of the mega caps report this week. It is tech front and center.
And can I just say it's a WOA tech deal? I mean, I'm just going to say in the chip space. We're going to get into it in just a moment. That is definitely our world on this Tuesday. Let's get you going, though, with a check on that trading day. Here is Charlie Pella.
Hi, thank you very much. Happy Tuesday to both. Let's begin with that WOA. We're talking about chips. We're talking about Xilinx and AMD. AMD buying Xilinx. AMD down now by 5%. Xilinx surging 7.9%. And among the tech companies reporting after the bell today, Microsoft, MSFT, shares of Microsoft up now by 1.9%. It is a mixed day. We've got the Dow lower by 74. I'll tell you why in a moment. Let's get right to the numbers. S&P up 3 right now. That is a gain of 0.1%. The Dow, by the way, down 0.3. NASDAQ up 84, higher by 0.7. 10-year up 7/32. 10-year yield 0.77%. Tech shares advanced after AMD announced that $35 billion takeover of Xilinx, helping to blunt concern about the impact of growing coronavirus infections. Oil is climbing. West Texas Intermediate now surging 3.1%, up $1.20 a barrel, 39.76. Spot gold up 0.4%, 19.08 the ounce. So again, recapping, S&P up 3, little changed, up 0.1%. I'm Charlie Pella. That's your Bloomberg Business Flash.
All right, we are set up on this Tuesday. Let's get the Bloomberg Business Week agenda as well. Katie Greifeld is with us, cross-asset reporter at Bloomberg News. She's back with Kaylee in our Interactive Brokers studio. Dave Wilson, stocks editor at Bloomberg News. He's on the remote access from New Jersey. So, Dave, let's kick it off with you. I feel like markets just, I don't know, they're waiting for something. I mean, they got a big tech deal, and tech seems to be doing okay, but everything else kind of blah.
Yeah, that's sort of how it's going. And actually, if you look at the chip makers, the Philadelphia Semiconductor Index, you don't see a whole lot of movement beyond Xilinx and Advanced Micro Devices, the companies involved in this $35 billion deal. In fact, most of the companies in the SOX, that's their ticker, SOX, are lower at this point. So it's not like everybody woke up and learned about this takeover and said, well, I guess there's going to be more chip deals. It's certainly
there's already been a lot of tech deals this year, just in the last couple of months.
That's true. I mean, there certainly have been. And, you've got the possibility of another deal being revived, with Tiffany and LVMH talking again. And, Tiffany shares up 5%. So there's some of that kind of activity. It's just that you're not seeing a lot in terms of earnings to get excited about. I just point to the 3 drug makers that reported today, Eli Lilly, Merck, and Pfizer. Merck's results for the third quarter, beating analyst average estimates in Bloomberg survey, stock little change. Eli Lilly disappoints, shares are down 6%, and Pfizer is just sort of going nowhere as well. Their numbers were pretty much in line with estimates. That's consistent with what we've seen, with the third quarter earnings season. When companies beat estimates, they don't get rewarded, and when they fall short, they definitely get punished.
I just want to say the SOX is up almost 80% from that March 18th low. So it's had, and I know, Kaylee, you follow this stuff. I mean, it's had quite a bounce.
It's a pretty good time to be a semiconductor, I would say.
Yes.
Katie, I want to throw it over to you. Dave talking about deals, talking about earnings, but of course, underpinning all of this is the clock is ticking. We are 7 days from an election. How much of that is factoring into the market action today?
Well, I'm going to follow up on Dave's point. Outside of the companies involved in this deal, there's not a lot of movement. And I would argue it's actually a risk-off day if you look past what the NASDAQ 100 is doing, what the S&P is doing. You still see bonds are rallying big time. Gold is up, the yen is up, and that's to your point because the clock is ticking. We have a major risk event coming up, and not to mention it's the most important week of the earnings season. So you're definitely seeing that anxiety still percolating in the asset classes today. And not to mention, COVID case counts are still up. That was the big thing that dragged risk sentiment down yesterday. And that is still underneath the surface here.
I'm just going to say, though, 5 of the major industry groups in the S&P 500 out of the 11 are higher today. So it's kind of that, I feel like, some tension in the markets, and it's not either completely risk off and certainly not completely risk on in the trade.
Yeah, it's. I like to describe the market right now. It's very human. Investors are really trying to place their final chips as we head into the campaign home stretch. Who knows which way the virus is going to go. We are getting encouraging news on a potential vaccine coming in the next few months, but it's still, this weekend showed us with record U.S. case counts, hospitalizations are going up. We're dealing with the most unknown of unknowns. And we have an election coming up on top of that.
Oh, yeah, that.
that little thing. What's November 3rd? Katie, I feel like the narrative for several weeks now has been a blue sweep. And all of the notes I've read from strategists on the street are about the blue sweep, what's going to come with all this stimulus and green spending. What if we don't get it?
And that's, again, where the market is very human today. You are seeing a lot of notes coming out from analysts saying that, hey, maybe that blue wave we've been talking about for weeks, maybe it's not such a sure thing. And this had been priced in so much in markets. I mean, that's why you saw 10-year Treasury yields climb back to 90 basis points last week. And I'm still sticking with my call that it's a risk-off day in the markets. But I think that's also what you're seeing play out in the bond market, that people are realizing that, perhaps that blue wave we've been talking about, maybe it's not a lot. And if we do have a divided Congress, it's going to be a lot harder to get through a multi-trillion-dollar fiscal aid package.
Right.
So
Vince Signorella putting out something out on Bloomberg, too, as well. We talked to him a lot, too, and he said a Trump win and a flip Senate with the House remaining under Democratic control could actually be a positive risk event, contrary to the consensus. And we need to kind of be eyes wide open here in terms of how things might ultimately play out. Maybe we don't know everything at the end of Election Day, but shortly thereafter in terms of what it means. Dave Wilson, you've seen a lot of elections. Just quickly, your advice here as investors are listening to our chat here.
I'd say listen next hour to me talk about my chart of the day. I mean, you're talking about this blue wave. And,
deep tease.
What if you don't get one? The chart kind of addresses the question, what if you do?
I love that. I love looking at history and charts and the market and politics. All right, Dave Wilson's going to be back later on with that. Katie Greifeld, thank you as always, cross-asset reporter at Bloomberg News. Check her out, too, at K. Greifeld on Twitter. So we've got a jam-packed Tuesday coming up. It's a big day, as you said, at the top for technology. Microsoft, after the close, will break it down and really take a look at the company that Microsoft has become under Satya Nadella. There was a great cover story last year from Business Week, but we'll dig a little bit into that. And then we got to talk about this massive chip deal.
Yeah, we absolutely do. But also, Carol, as Katie rightly pointed out, we got to talk about the virus, that underlying everything at the moment. Cases continuing to climb. We're going to get the latest from Dr. William Yates. He's out in Chicago. He's going to tell us the latest there. He's, of course, the founder and owner of Yates Enterprises as well. So we'll get his insight on all of the really bleak numbers we're seeing.
You're right. And it's, in terms of the longer term trends of the economy and as well as the financial markets, it's all virus contingent. So it's really important to do that, of course. Got a couple of leaders on life under COVID and addressing the inequities in our world. Judy Marks, president and CEO at Connecticut-based Otis Worldwide. The guys who make the elevators and the women who make the elevators. They just came out with earnings, but she's also got some thoughts about inequalities and workforces. So we're going to get talk to her about that. And Jay Littman's going to come back. He's co-founder and president of Ethic. It's all about ethical investing, and he's talking about really democracy and thinking about it from an investor's perspective.
Yeah, 2020, I feel like, is becoming the year of ESG, just with everything we've seen play out this year. So it'll be interesting to get his take on how his business has changed.
And I feel like it's ESG with teeth a little bit, right? It's not a lot
there's
of greenwashing.
like commitment to it this time, I feel like. And you mentioned inequality, Carol. We're also going to talk about racial inequality in Black-owned businesses. One shaking up the white-dominated yarn industry, interestingly enough. Really excited for that one. And then another one, electric bike. It's becoming all the rage.
Yeah.
Thank you, COVID-19.
Totally. It's two small businesses. They're profiled in the magazine, and they are both definitely making their impact among the virus. All right, so lots to come over the next 4 hours. Just quickly, we'll do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, nice and round, is 100,000. Amazon.com says it will hire 100,000 people to help meet holiday shopping season demand, half the total of last year after the company dramatically boosted staffing during the pandemic. Those numbers, right? Amazon is the law of large numbers, right?
It is. It's a giant in every sense of the word.
All right, lots to get through. First up, though, let's check on world and national news. For that, it's over to Nancy Lyons in D.C. Hi, Nancy.
Hey, Carol. It is a busy day of campaigning for both presidential candidates. President Trump is holding rallies in Michigan, Wisconsin, and Nebraska, while Democratic nominee Joe Biden is in Georgia. He just spoke in Warm Springs. Now he's going on to Atlanta. With a week left before the election, Morning Consult co-founder Kyle Drop tells Bloomberg Biden's advantage appears to be holding.
I would say in most of the key battleground states, whether it's my home state of Wisconsin or Michigan or Minnesota or Pennsylvania or Florida, we've seen consistent Biden advantages in our daily polling and everything that we're doing.
Drop says, unlike 2016, they are not seeing shy Trump voters who don't want to reveal their choice to pollsters. He says anonymous online polls are trending the same as their phone polls. President Trump's son-in-law is coming under heavy criticism after saying Black Americans have to want to help themselves in order for the president's policies to help them. Jared Kushner, who's known as an advisor in the White House, made the remarks during a Fox and Friends interview.
One thing we've seen in a lot of the Black community, which is mostly Democrat, is that President Trump's policies are the policies that can help people break out of the problems that they're complaining about, but he can't want them to be successful more than they want to be successful.
The Democratic National Committee has responded by saying the administration's, quote, dismissive approach to the issues that Black voters care about is indicative of Trump's callousness and disregard for the lives of Black people. End quote. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week on this Tuesday. Carol Massar along with Kaylee Lyons. Listen, we talk so much about the rise in the number of cases, right? And then we hear, arguments, debates, conversations that, okay, there's more cases because we're doing more testing. But when it gets down to hospitalizations, I mean, they are what they are. And that is certainly something that we are seeing as well on the rise. We've got a great story by Jonathan Levin talking about COVID-19 hospitalizations specifically, and they have risen at least 10% in the past week in 32 states in the nation's capital. And this has to do with, of course, COVID-19. And we're seeing, again, pressure, Kaylee, on our national healthcare system.
Right. And in some places more than others. I mean, at least 10% in 32 states, but some in particular are seeing really astronomical numbers. Hospitalizations up 68% in New Mexico, 50% in Wyoming. I mean, this is nothing to balk at. Yes, you can make a case for cases if they're not serious. How much do we care? The mortality rate's going down. But these, when they require hospitalizations, are serious cases. And as you so rightly point out, they do put a strain on our healthcare systems.
Right. So unbelievably higher in New Mexico, Wyoming, Connecticut, South Dakota, Montana, and North Dakota have the most current patients per capita, according to the data that's been put out. And, again, this gets to, I guess what kind of floors me is we have a lot of hospitals, we have a massive healthcare system in this country, but it doesn't take much for all of a sudden the whole system to be strained.
Yeah, that's right. And it does call into question. We've heard from the Trump administration this week, his chief of staff, saying we can't control the virus. All we can do is, focus on vaccines, things to do after it spreads. And it does beg the question whether or not that's the right approach, given we do have a constrained healthcare system. We have limited hospital beds. isn't stopping the virus the avenue that you want to go down? And that's definitely a question we can pose to our guest that's coming up, Carol.
Yeah, exactly, in terms of what they're seeing. And yeah, and it really speaks to, as you said, some of the shutdowns that we're seeing because we're trying to get this all under control. All right, we're going to check in with Dr. William Yates. He's the founder and owner of Yates Enterprises. He's going to check in from Chicago, which we know that city is once again under lockdown. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy Tuesday here. The Dow, the S&P lower right now. NASDAQ higher. Stocks swinging between gains and losses. Right now we've got the S&P lower. Little change. Down a point. Down less than 0.1%. Technology shares advanced after Advanced Micro Devices announced a $35 billion takeover of Xilinx, AMD down 5.3%, Xilinx up 7.3%. Again, NASDAQ up now by 0.6%. But the Philadelphia Semiconductor Stocks Index, the stocks, it is down 0.4%. NASDAQ 100 Index up by 0.7. Right now, the Dow is down 118, lower by 0.4%. Again, the S&P down by 1 point. 10-year up 7/30 seconds. 10-year yield 0.77%. Gold up $6.50 the ounce, up 0.3%. 1908 spot gold there. West Texas Intermediate crude up 2.6%. 39.55 a barrel. Harley Davidson shares surging after better than expected profit. Ticker on that HOG up now by 23.3%. Microsoft after the bell up now by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Must have been the Harley you bought, Charlie.
I would love to get a Harley. You know, I used to ride motorcycles back in high school. I know a lot of coworkers don't think of me as a motorcycle guy, but I would love to be back on a bike cruising around New York State.
Wow, learned something new on this Tuesday. All right, Charlie Pellet, thank you so much. We also did learn a bunch new, or maybe more, if you will, on really the tough spot we are once again when it comes to COVID-19. We did have Pfizer CEO saying that the company may know by the end of October whether or not its vaccine is effective. Germany looking at closing restaurants, prohibiting large events as well. Governments across Europe really looking to fight back those rising infections and fatalities that they're seeing, and they're trying to avoid those full-scale lockdowns. And in keeping with that, Kaylee, I think safe to say one of the headlines that stayed with us big time last week had to do with Chicago putting into place a curfew because of the virus. That was a big deal.
Yeah, non-essential businesses having to close down at least through the end of next week at a certain time, limiting gatherings to a max of 6 people. But Chicago is one of the places, the mayor over there, Lori Lightfoot, saying cases are going up in every single zip code. So you kind of got to do what you got to do to get those numbers down.
Well, we've got a perspective on Chicago. Dr. William Yates, founder and owner of Yates Enterprises, is back with us. He's a trauma surgeon, and he joins us on the phone in Chicago. Dr. Yates, nice to have you here with Kaylee and myself. First of all,
hello.
Hi. What's Chicago like? Tell us what Chicago's like right now.
Well, we'll start with the weather. Not good. I heard the weather in New York. It's a lot better. It's snowing here, so that's one.
Oh.
Okay, so number two, as far as the COVID situation, as I heard on the intro, Mayor Lightfoot has enacted a curfew where at 10 p.m. restaurants have to close, the last drinks at 9 p.m., and it's kind of, downtown looks like a ghost town, and my office is in downtown, so the numbers are rising at an exponential rate, and no one really seems to have a good handle on why or what the cause is. So it looks like a ghost town, to be quite frank with you.
Dr. Yates, Carol and I were talking on this program yesterday about the concept of pandemic fatigue, and people are just tired of staying at home. They're tired of having to abide by these restrictions, and it's kind of a vicious circle where if you don't want to stay at home, you go out, you let your guard down, then cases pick up. Do you think that phenomenon may be part of this?
I would say without a doubt. Cabin fever, COVID-19 fatigue, all the same things. People are just tired of staying indoors. They're going outside. And a lot of young people just think they're invincible. And it doesn't become real unless you know somebody who has COVID. So a lot of people still think that this is some imaginary disease because they don't know anybody with COVID. So they go around and disregard all the admonitions that are out there. And that's what I think is really sparking things up. And the other things are bars. Bars, once this cabin fever started, people started hitting the bar scene hard. And, at a bar scene, that's like the perfect petri dish for COVID-19 spread.
Well, Dr. Yates, let's talk a little bit more about Chicago. You said you guys don't know why these numbers are rising. And I'm just looking at, I think, one of the latest reports, and we're talking about 4,000 new confirmed cases in Chicago, 46 additional deaths reported, or maybe it's in the state of Illinois completely. Why do you think the numbers are rising? Is it because the bars have been opened? Is it because of pandemic fatigue? Is it because it's getting colder? What is it?
Well, I think it's a lot of the above. I think more than anything, it's the cabin fever fatigue where people are getting out. And again, it's not personal. And in medicine, it's well known, if things aren't personal, they aren't true. So it's hard for people to live and see things on TV that aren't real to them. So they don't wear a mask, they don't social distance, they go to bars because, you know, young people do things, take high-risk behavior, and it's just spreading like wildfire. And it's getting cold, so it's not many things for people to do. When it was warm outside, they had to stay inside, so now it's cold. So you think the opposite would happen, but it's going the opposite way. People are going more outside to have fun. So I think it's those soft reasons that are really bringing the numbers up here. And Lori Lightfoot, I mean, I think she's very smart. I mean, it's really economically like taking a blow below the belt to a lot of restaurants. But for the common good, I think it's a good idea that we get a handle on this right away.
I'm thinking, because you grew up on the south side of Chicago, are you concerned about those more vulnerable populations once again? And especially now we're seeing, I think, in some of the stories that it's not just younger people. Once again, it's older people who are being targeted. But again, are you worried about those more vulnerable populations?
Well, you always have to be, because always they're going to be the underserved population, again, is a great petri dish for COVID. They have no access to health care. They can't stay at home and work from home because most people who are from more poverty-stricken areas work in the service industry, so they have to show up. So anytime you see any numbers with COVID, you're going to see the Hispanic population and the African-American population kind of lead the pack with cases for that reason, mainly because social distancing, since you have extended family at home, it's just not like one family that lives in a 3-story house. You have like 2 or 3 families in one apartment, and you're in the service industry and you can't stay home and Zoom all day. All those things add up, not to mention that comorbidities, which we all know makes it worse, which are more prevalent in that population.
We're going to come back and talk some more. We're going to do a little bit of news, and Dr. Yates will come back in just a moment. We are speaking with Dr. William Yates, founder and owner of Yates Enterprises, on the phone from Chicago. And I do wonder, Kaylee, because we've spent 6-7 months with this, if we've figured out, though, any ways to maybe protect some of those more vulnerable populations. I do wonder about that.
Well, I think if we had really truly figured it out, we'd be able to kind of stem those cases, though, right? I mean, maybe we figured out how to treat it once people have it, but have we figured out how to stop the spread? I feel like that answer still kind of is no.
Yeah. All right, we're going to continue this conversation right here on Bloomberg Radio.
To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Tuesday. Carol Massar along with Kaylee Lyons. We keep hearing different things, or maybe it's the same message from, I feel like, the White House.
Yeah, different things, same message. I maybe misconstrued message. If you ask Mark Meadows, the president's chief of staff, he said a few days ago, made a lot of noise, saying that the White House's approach is that they can't control the virus, that all they can do is really focus on a vaccine, on mitigation areas, basically fixing the problem, not the problem itself, seemed to be the message. Mark Meadows walked that back, but that is what he said.
So we're going to dig into that with our guest, Dr. William Yates, in just a moment. Let's get back, though, to your top business stories. Another check on the trading day. Here is once again Charlie Powell.
Hi, thank you very much, Carol Massar. Choppy day with the Dow, the S&P, both lower. NASDAQ is higher. S&P has been swinging between gains and losses. Technology shares higher after AMD announced that $35 billion takeover of Xilinx. Xilinx shares, they're up now by 7.7%. AMD on the minus side by 5%. NASDAQ, though, surging 59 points, up by 0.5%. But interestingly enough, despite the chip deal today, the Philadelphia Stock Exchange SOX, the semiconductor index, is down 0.4%. NASDAQ 100 index up 0.6%. Dow Transports, they are tumbling by 1.4%. So the Dow down 134 points, now down 0.5. S&P down 2 points, down 0.1%. NASDAQ up 60, a gain of 0.5%. 10 years up 8/30 seconds. 10-year yield 0.77%. Gold up 0.4%. 19.09 the ounce. And West Texas Intermediate crude up 2.7%. Up $1.03 a barrel. WTI 39.59. Pfizer says a late-stage trial of its vaccine hasn't yet reached a key milestone that will help researchers determine how well it protects people from COVID-19. The news came after Eli Lilly said a U.S.-run clinical trial of an antibody therapy will end. Pfizer shares lower by 0.5%. Lilly now tumbling 6.3%. Also reporting earnings this morning. Merck, its shares up now by 0.1%. Deaths per day from the coronavirus in the U.S. are on the rise again, just as health experts had feared, and cases are climbing in just about every state. Dr. Amish Adalja is senior scholar at the Johns Hopkins Bloomberg School of Public Health.
There are multiple states in the United States, including Wisconsin, both North and South Dakota, as well as Utah and parts of Texas, where hospitals are unable to cope with the number of patients that they're getting. And what that means is that not only will they have to deal with a lot of COVID patients, but that impacts all their other operations, meaning their heart attack care, their trauma care, and that makes everybody's health go down. So the key thing is, even if you have pandemic fatigue, the hospitals still have to take care of patients with COVID.
And that's Dr. Amish Adalja of the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg Philanthropies. Again, recapping stocks trading mixed with the S&P down 2 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Let's stick with our conversation about the virus. There's headlines crossing the Bloomberg terminal right now from New York Governor Andrew Cuomo. Carol, more places I'm not allowed to go. California added to the travel advisory list. Massachusetts, non-essential travel to and from is discouraged. These restrictions just keep on coming. So I want to bring back in Dr. William Yates. He is a trauma surgeon. He's also founder of Yates Enterprises. He's on the phone with us from Chicago. Dr. Yates, I want to ask you about something. Carol and I were just discussing the White House's approach to the virus, and Mark Meadows saying they can't control it. They just have to focus on mitigating it afterwards. Is that the right approach?
Well, I guess they can't control it, number one, because they didn't try to control it the appropriate way. No, that's not the right approach. I mean, science always wins, as history has told us. In the beginning, if we had followed normal protocol or scientific protocol that was given to the government by the experts, I don't think we'd be in this predicament. The new thing that the White House has put out is this herd immunity. I don't know if you were going to discuss this at all, but it's kind of the same thing. Herd immunity means just let the virus take its course and basically survival of the fittest. Whoever lives, lives. It's just like, one big apocalypse. And that's kind of what the White House has been promoting as well. A lot of people think that's a great idea, that it'll get rid of the weak and only the strong will survive and we'll be done with it. And of course, most people who can really think through it think that's a terrible idea.
Well, I'm sorry, go ahead.
It's just, what's the alternative? What if we could do it your way, how would we do it?
Well, my way would be, as the book says, one, work as hard as you can to produce a vaccine. Now, producing a vaccine isn't going to be a miracle cure because the numbers are now showing that the American population are losing faith in taking the vaccine. From, maybe a month ago, 70% of people said they take it. Now, less than 40% said they'll take the vaccine. So that's already producing a problem. But until that vaccine is developed or we have adequate treatment, I think each state, especially the troublesome states, should mandate that you have to wear a mask, 6 feet apart, do what you have to do with the restaurants. Unfortunately, economically, you're going to have to support a lot of people as well. Testing is a big deal, frequent testing, especially of children or people that are, essential workers, and contact tracing as well. But and sanitation, all those things that Dr. Fauci says every day. I think as humans, everybody is always talking about violation of my rights and so forth and so on. And the people who are talking about their rights have no idea about anything in the Constitution because there are no rights about mask wearing in the Constitution.
No, that's fair to say. If I could just go back to herd immunity, I mean, my understanding, Dr. Yates, is that if we did something like that, we have to be comfortable with a lot more people dying.
Yes, we would have. Some people say the numbers would be in the thousands, some say in the millions, and that's why people who are compassionate and are scientists say it's unethical. Why would you risk that many lives just to get herd immunity? Those are the kind of things that happened, in the era before we had antibiotics. I mean, in, like Civil War days or, 16th century.
Right.
That's how diseases were cured, herd immunity. You either survived or you didn't. But we've evolved since then, so I don't think that's a very prudent way at all because nobody wants to risk themselves or their loved one or anyone else they don't know for some, I think, ridiculous reason like that.
All right, going to leave it there. Dr. Yates, thank you as always. Really appreciate your time. You've been one of our go-to voices on the pandemic since the spring, so we really appreciate it. Dr. William Yates, founder and owner of Yates Enterprises, on the phone from Chicago. Our conversation happening, Kaylee, as we see another headline, France reporting 523 coronavirus deaths. It is the most since April 22nd, so we're going back to, in many ways, those levels that we saw back in the spring.
Yeah, and not just in France, in many cases, in many countries around Europe, in cases in Germany, for example, at a record. And it's one of those things that makes you question, is this going to be a repeat of March where we're just 6 weeks behind Europe?
Yeah, exactly. All right, you are listening to Bloomberg Business Week. Carol Master, Kaylee Lyons. Right now, a time for a check on world and national news. Back over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol. Democratic presidential hopeful Joe Biden is in Georgia and spoke of healing the nation while in Warm Springs, where Franklin Delano Roosevelt sought comfort. Biden also spoke of Roosevelt's indelible imprint on the nation.
When Franklin Delano Roosevelt's funeral procession went by, a man collapsed in grief, and the neighbor asked him, "Did you know the president?" The response was, "No," the man said, "but he knew me. He knew me." Few words better describe the kind of president our nation needs right now.
President Trump, meanwhile, is taking his campaign today to Michigan, Wisconsin, and Nebraska. Newly confirmed Justice Amy Coney Barrett now sits on the Supreme Court, and her plate is already full.
Barrett has said she would act independently of politics, joining the court as it deliberates pending voting disputes from North Carolina and Pennsylvania. Next month, Barrett and her colleagues will hear an appeal to exclude undocumented immigrants from the census count. The Trump administration also wants the court to declare the Affordable Care Act invalid, and in just a few days, Barrett could have to make a key decision on whether to hear Mississippi's defense months of a law banning most abortions. In Washington, I'm Amy Morris, Bloomberg Radio.
A federal judge is denying President Trump's request that the U.S. replace him as the defendant in a defamation lawsuit alleging he raped a woman in the 1990s. Jean Carroll sued after the president called her a politically motivated liar. The Justice Department had argued Trump's statements were made as part of his presidential duties. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Kaylee, this story, I feel like, is a reality check for all of us. And we talked about it a little bit with Dr. Yates, but, you know, we are all in, the world is, in getting a vaccine. The U.S. alone has committed more than $10 billion to develop new shots to fight COVID-19. About half of Americans saying that they are wary of taking them, according to a Gallup poll earlier this month or this month. And what's interesting is that this whole idea that, you know, if we're waiting for a vaccine to fix everything, it may be a long time in coming. Right? Because it's not only creating a vaccine that works, that's effective for most of the population, and then getting people to take it, but it's the logistical the logistical problem of actually producing it and getting it out there.
Right. You have to scale it. You have to distribute it. That takes a lot of time. It takes a lot of resources. And we were just talking about the concept of herd immunity. To do that through a vaccine, the WHO says you need to basically get the shot to 60 to 70% of national populations. That is a lot of people, so that's a wide distribution network that you need to have. It seems like a very big challenge, and that's when we get a vaccine approved. I mean, we just saw one, Novavax, which has gotten money from the U.S. government, had to put a late-stage study back. Maybe not going to happen now until November. So we're seeing the progress toward actually getting a vaccine kind of stalling out in some cases for some of these candidates.
So I'm just going to say, if you're driving or if you're sitting and just half listening to us, maybe just sit down and just take a moment, because listen to this, because according to the London-based firm Airfinity Limited, they say any shortfalls in the vaccine program could mean the United States will struggle with the virus well into 2023.
Oh, don't say that, Carol.
No, it's not me. But it's just this whole point, right? That especially if there's pushback, we talk about pandemic fatigue, we talk about people who don't want to social distance or wear masks. And then you've got now people that even if we get a vaccine won't take it, that means this probably lingers and stays with us that much longer. We know as it's getting colder, we're seeing these spikes, right?
Yeah, it's a humbling reminder this thing could be sticking with us for a while to come.
Yeah, definitely a reality check. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tech shares are pushing higher. We are looking at a mixed day on Wall Street. NASDAQ up 46 now, higher by 0.4%. NASDAQ 100 index up 0.5%. Xilinx jumps after agreeing to a $35 billion sale to AMD. Xilinx up 7.8%, AMD down 5.1%. Philadelphia SOX, the semiconductor index, down now by 0.5%. The S&P 500 index lower by 8, down 0.2%. The Dow is slumping 188 points, down 0.7%. 10-year up 7/30 seconds with a yield of 0.77%. Gold up 0.3%. Spot gold now at $19.08 the ounce. West Texas Intermediate crude up 2.4%. $39.51 a barrel. So again, recapping here, equities are trading mixed. S&P down 6, down 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's a business that its CEO initially thought would see dark days because of COVID-19, and then, well, things kind of changed big time in a good way. Let's get into this story on Rad Power Bikes. I just kind of love the name. Bloomberg News global business reporter Ira Boudway with us on the phone in New Jersey, along with Bloomberg Businessweek editor Joel Weber on the phone in Brooklyn. I feel like we have so many of these kinds of stories, Joel, where initially business thought, okay, it's the end for us, and then all of a sudden it was like, not so fast.
And even more so with this one, because they were kind of looking at it as, you know, a segment of the bicycle industry. We're talking about e-bikes in general here, that has always been viewed by cyclists as sort of, you know, a segment not to be discussed. Let's call it that. And boy, you know, at the beginning, the CEO of Rad here that Ira spoke with thought it was going to be, you know, maybe like potential sort of like dark days, nail in the coffin kind of territory. And then all of a sudden, here we are months later, and these bikes have become hugely popular among a commuting set. And I think it really speaks to the way that certain products can find a new relevance because of the reality that we all face here in the pandemic. What kind of demand has Rad seen for their e-bikes, Ira?
Well, they were already growing like gangbusters. So they really came online in 2015, and they were doubling year over year. So last year they were at about $100 million in revenue, which already made them the biggest brand in a relatively small market. And they suddenly started to triple in April of this year, and haven't seen that cool off. But that's actually in line with, I mean, they're hotter than most, but if you look at the e-bike market as a whole, you know, last year it was a little less than 400 million in terms of bike shops and big box stores. And I'm sorry, this year it's already close to 400 million. Last year, for the whole year, it was less than 250 million. So it's more than doubling. So it's one of those many outdoor things that has gotten very hot because of the pandemic.
Okay, Ira, I just need to be upfront about this. I am not a bike fan. I live in Manhattan. I have been in many cabs.
Not be a bike
I have
fan?
been in so many cabs that have come within seconds of hitting a cyclist. I have no desire to be that cyclist. Say I want to dabble, though. How much would one of these things cost me?
You can get a Rad Power e-bike delivered to your house for about $1,000. And this is this is why they're so successful, is they have come in well under a lot of the bike shop brands by delivering directly to you, skipping all the retail markups, and depending on who you ask, by using kind of not as high quality parts on the bikes. And but that was their goal, to make a mid-price kind of good enough quality bike that people would get people into this market, because really a lot of people have been shy about it because these things can cost eight grand. Many of them are $3,000-4,000. So you can get one of their entry level ones for $1,000. They have others that are $1,200. The one I tried out, which is a big cargo bike, is about $1,700. And the idea is that this can do a lot of things that your car might do now, you know, depending on where you live. You can grocery shop with it. You could carry kids on it. You can commute to work on it. So, you know, it's actually maybe saving you money if you use it right.
And how does this segment, how does it fare elsewhere in the world? Because it's catching fire here, but internationally, other countries or continents even have viewed e-bikes differently than we have in America.
Yeah, the world looks at us as kind of weird, actually, on this, because the e-bikes are just kind of a curiosity here that's just now beginning to become kind of a part of the mainstream consciousness. If you look at China, the best estimate is there's more than 270 million used every day. Europe, you're talking about maybe 10 million. And in the United States, there's maybe 1 million. So, and RAD itself says there's more than 100,000 of theirs on the road worldwide. So the scale in North America is just, there's a lot of opportunity there, but it's a lot of barriers. And one of the biggest ones is what you mentioned, safety. People need to feel safe, and the roadways need to be safe before they will really start to use these every day to go to the store, go to the mall, go to work, whatever it may be. And so it's kind of a chicken and egg problem right now. You've got to get people to buy them so that they have them, so that they're advocating for the roadways that they need. But that is, what they think maybe is beginning to happen, that there's enough people who tried these out, maybe because their vacation got canceled and they were looking for a way to get out of the house, in March and April.
Right.
And then they start using it for a trip to the grocery store. Then they think maybe I could go to work on this, and then maybe they start, advocating for bike paths and changing their habits. So that's kind of the hope, at least among the industry.
Ira, it's a great company story, small business story. It's also the guy behind it. You talk about Mike, who created this company, but he did his first e-bike when he was like 15 years old. I mean, he sounds like an interesting character and an entrepreneur, inventor.
Yeah. He's from Humboldt County, California, and was just kind of a kid who grew up kind of a little bit off the grid and was a tinkerer, and he wanted to get himself to school was the original impetus for this. So he took like a 40-pound specialized bike, a 40-pound lead-acid battery, put it on a specialized mountain bike, and built it. That was the first one, and it just kind of grew from there. First, it was like a bespoke business. This guy's name is Mike Radenbaugh, by the way, which is where the name comes from. But it was a business they did one-offs. People would ask him, hey, could you make me one like that? And then they realized over time that everybody wanted roughly the same thing. They wanted it not to cost too much. They wanted it to carry a certain amount of weight, be easy to ride. And so they built one called the Rad Runner, which is sort of their biggest model, their most popular model that sort of checked all those boxes and started selling them online.
Okay, so I got to ask about your test drive. Can you talk to us about your experience on the bike, Ira?
Well, and I'd also like to know how long it took you to build this thing. Please give us some color on that.
That is one of the big frictions for them, because they took inspiration from like Warby Parker and Casper, but you get a mattress or glasses delivered to you, direct to consumer online. You put it on your bed or on your face, and you don't think about it again. This is a little more complicated. This big box comes. You've got to do some assembly. A lot of it's done. They actually put them all together at their factories, mostly in China, and then they disassemble enough to get it into a box, like the front tire, the handlebars, some of the pedals. Some of the stuff's not on, and you got to do a fair amount of assembly when it comes. And they send instructions, and that was tricky. Honestly, I wish I'd have had more help and support. And that's what they're trying to do, is build a bigger support network of bike shops and vans that will come to your house, and their own service that will come to your house and do the assembly and make sure it's set to go, because it does need some assembly and maintenance.
Right.
But I did manage after about a few hours. I spent the better part of a day putting it together, and that's partly because I'm not that bike literate. I haven't done a bike in a long time, and but I got it up and running and confident enough in it to put my kids on the back, and
you liked
it? It was a lot of fun.
Right.
They loved it. I mean, they were. I didn't wind up. So they sent me their big Rad wagon, which is the one that can put 2 kids on the back. It's a huge bike, and I ultimately decided not to because it was so big. But my kids really wanted to. They loved it.
I'm just going to tell everybody, check it out on Bloomberg.com, because it's a fun read, this story. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is up next. But as we said, thanks to Ira Boudouet of Bloomberg News, along with Joel Weber, this is Bloomberg Radio.
headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 27th. It is a choppy session. Technology shares are advancing after Advanced Micro Devices announced a $35 billion takeover of Xilinx. Xilinx shares up by 8% now. AMD, the acquirer, down by 5%. S&P is lower. NASDAQ lower as well, but NASDAQ is pushing higher. Right now we've got the NASDAQ Composite Index up 56, up 0.5. The S&P is down 6, a drop there of 0.2%. The Dow Jones Industrial Average lower by 175 points now, down 0.6%. 10-year up 7/32, 10-year yield 0.77%. Gold is up 0.3%, 19.07 the ounce, and West Texas Intermediate crude up 2.3%, 39.43 for a barrel of West Texas Intermediate crude. So we are looking at an election 1 week from today. Andrew Sliman is head of Applied Equity Advisors at Morgan Stanley Investment Management. And on Bloomberg Television this morning, he told us he is looking beyond COVID and beyond the election.
So the question is, what are the unknown risks that we're not talking about? What happens if the economy accelerates too fast and the Fed changes policy? What happens if, we have another Fed chair next year? I'm just throwing out things that people aren't talking about. That's what the market tends to react more negatively to.
Caterpillar failed to give reassurance that more hang-ups from the coronavirus pandemic are definitely behind the heavy equipment maker. On a conference call, CEO Jim Umpleby said he would not be giving 2021 guidance. The company reported third-quarter profit that topped analyst estimates, helped by lower-than-expected taxes. Caterpillar is considered a bellwether for the global economy. After the bell, we will be hearing from Microsoft. Microsoft shares continue to advance, and along with other big technology names, right now Microsoft is up by 1.9%. And BP used a surprise third-quarter profit to reassure investors that it is on the road to recovery, while also warning it will be a long journey. Recapping stocks trading mixed, S&P down 5, down 0.2. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week on this Tuesday. Carol Masser along with Kaylee Lyons. And Kaylee, man, I saw this reading in this morning, and this is certainly one of our top business stories, one of our top deal stories, and it's kind of a top disruptive story as well. Talking about AMD buying Xilinx for $35 billion. It's a stock deal.
Yeah, and it's a big stock deal, and it's yet another chip deal, Carol. I mean, we've seen so many of these this year. I wonder, what is driving this need for consolidation in the chip maker space?
Well, we're going to find out, because someone who's been really busy tracking all of the comings and goings in all these deals is Ian King. He is our go-to person when it comes to anything in the chip space. He's U.S. semiconductor and networking reporter at Bloomberg News. He's on the phone in San Francisco. And Ian, I feel like in the last couple of months, I've said WOA to you a couple of times. This is a massive deal.
It certainly is, yes. And it's something that, on any number of levels wouldn't have been imaginable a fairly recent amount of time ago. Obviously, the ability of AMD to fund something like this in stock, as Kaylee just alluded to, is a very new and almost shocking phenomenon, and just a sign of just how far this company has come.
Well, and talk to us about the significance of it being a stock deal, because I know when there were first murmurs that this acquisition might be happening, there was concerns about leverage. Does that kind of allay all of those fears?
Yeah, I mean, you've nailed it. I mean, investors have basically PTSD with AMD when it comes to debt. You'll remember at its previous peak back in the mid sort of 2000s, it went out and bought ATI, did that deal for cash, and ended up with a real debt burden that it just couldn't get its way out of, and that hurt it in terms of its, the massive expenditures that you need to invest in chip making technology, and it just couldn't keep up and fell further and further behind Intel. Investors did not want to see that happen again, and obviously Lisa Su, the CEO, has managed to negotiate the first hurdle there.
First of all, I just love this company because it's a major tech company and it's run by a woman, so it's just kind of cool, and it's a rarity, I feel like. Ian,
first ever time in the chip in the industry's history, so yeah, that's definitely worthy of note.
It's remarkable, and I feel like, listen, she's shaking things up. Is this all about going after Intel? What is the significance of this deal specifically?
Yeah, no, that's a good point. I mean, on one level it is because Intel bought Altera a few years ago. Altera is basically a mirror image of Xilinx, so yes. But on another level, Lisa's saying, look, this is not going to be creating magical products. This is me in a very practical way getting high margin revenue that's going to give me the cash flow, that's going to give me new markets, that's going to keep me, it's basically spreading my bets. And she's portrayed it in a much more practical way than Intel tried to sell the Altera deal a few years ago. And analysts have not been happy with what Intel has done with Altera. So she's approached things in a very different way, and it seems at least that she's taking a different approach and that people like it.
Well, and part of this too is about building up, scaling up when it comes to data centers specifically. Can you just talk to us about the importance of those data center chips in particular?
Yeah, I mean, this is a very much a pull thing. I mean, if you are Google, if you're AWS, if you're Facebook, you just flooded with data, literally more data than you can make sense out of. One of the things that they're trying to do with that data is to use artificial intelligence. One of the ways that you can accelerate some of these workloads is by getting them off the main processor that AMD or Intel supply and using what's called an FPGA, which is what Xilinx produces, to do parts of that to accelerate it and make that burden easier. So that's what's going on here, but it's still very early days. Xilinx is making really, really fast progress into the data center as a portion of its business, but it's still only about 14% of its total revenue.
You know, Ian, what do you make just this year alone? I think, was it September that we talked about NVIDIA buying SoftBank Group's chip division, ARM? That was a $40 billion deal. I do feel like we're kind of getting to a new world order when it comes to the chip space. And I think China's got to be watching, kind of salivating a little bit. They need all these chips, right? And they're still trying to really kind of develop that space, but they need that access.
Yeah, I mean, you raise a couple of extremely important points here. I mean, the industry has come together at an unprecedented level, and it's almost a question of who's left. Xilinx was arguably one of the few that was left, and that's simply been a factor of, the bets getting bigger and bigger for this industry. The customer base is more consolidated, supplying itself, so you have to have scaled in order to compete. At the same time, this deal is going to have to go through a protracted and thorny regulatory examination, and China has got to be one of the places where I think people are concerned about how quickly, if at all, it will get through that approval process. Same thing for NVIDIA, and that's geopolitics has inserted itself into this business as well.
Right, semis just getting yanked around as that battle between the U.S. and China, that tech Cold War that so many people call it, has continued on. Ian, I want to talk about AMD. They did report results this morning as well. Part of obviously got overshadowed by this deal, but in the results they said something very different from Intel, saying demand for data center chips remains strong. They also gave a really strong forecast for the fourth quarter. What's working for AMD that isn't working for Intel right now?
Yeah, I mean, this is the big debate around what Intel said a week ago. The numbers were okay, but they said, the data center's getting weaker. Companies aren't buying data center chips. They've got too much inventory. This is a COVID-related thing. And people were like, well, I'm not so sure about that. This is probably AMD eating your lunch a little bit. And then Lisa Su came along today and said, the data center demand's fine, which implies that those people who didn't believe Bob Swan over at Intel were perhaps right. And certainly, was not good news if you're an Intel supporter. That if AMD is going up, I mean, it's one gains and the other loses. It's as simple as that for those businesses right now.
Hey, 20 seconds left here. Are there any other deals, mega deals out there to be had? Just quickly.
Well, I mean, it's the biggest question, I think, is how these deals are going to get through that approval process. I think that's the biggest thing on everybody's mind right now.
Yeah, exactly. Well, it's certainly kept you busy and given us great reasons to check in with you again, which is always a good thing. Ian King, thank you so much. U.S. Semiconductor and Networking reporter at Bloomberg News on the phone in San Francisco. I mean, man, we've seen a fair amount of deal activity, but so much, I feel like, Kaylee, in the chip space this year.
Over $100 billion worth of mergers. I mean, talk about consolidation. All these chip companies are getting together, but it's a fair question. How many of them are really left to combine?
Yeah, exactly. Now it's all about execution. All right, this is Bloomberg. All right, let's get a check on world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Democratic presidential candidate Joe Biden is in the battleground state of Georgia, outlining his plans to deal with the pandemic and condemning the White House Chief of Staff Mark Meadows for saying they're not going to control the pandemic.
It's a capitulation. It's a waving of a white flag. It's a window into the shocking truth about this White House that they've never really tried.
President Trump has just begun a rally in Lansing, Michigan. He'll also be traveling today to Wisconsin and Nebraska. 20 former federal prosecutors who were appointed by Republican presidents are now endorsing Democrat Joe Biden.
The list includes 96-year-old William Webster, who served as both FBI and CIA director under President Ronald Reagan, as well as former Massachusetts Governor William Weld, who mounted a brief primary challenge to President Trump last year. In a letter released today, the 20 former prosecutors call the current president a threat to the rule of law and accuse him of politicizing the Justice Department. In Washington, I'm Nathan Hager, Bloomberg Radio.
The U.S. Postal Service is recommending if you do plan to vote by mail, you need to put your ballot in the mail by the end of today, regardless of any state deadlines, to make sure that it will be counted. The return of mail-in ballots in Wisconsin has resulted in a new Supreme Court decision. The court has sided with Republicans to prevent Wisconsin from counting mailed ballots that are received after Election Day. Twitter has flagged a tweet from President Trump in which he said there were, quote, big problems and discrepancies with mail-in ballots. Twitter flagged it with a warning the content shared might be misleading. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Kaylee Line. So let's talk about a story that caught your attention.
Yeah, this is one of the most read stories on the Bloomberg terminal right now. David Einhorn from over at Green Lake Capital, obviously someone investors pay a lot of attention to him, and he put out a letter to investors that Bloomberg got a hold of saying that tech stocks are in an enormous bubble. He says it's a working hypothesis, may still be disproven, but he thinks that on September 2nd of this year, that was the top, and the bubble has already popped.
Dun, da, da, da. I guess we shall see. We know that when we talk about momentum, we're talking about these big tech names, right? And every time everyone has said, we're at a top, it's getting, frothy, they're overvalued. We maybe see a little bit of a pullback, and then they just head even higher.
Yep.
And I think, people do liken it. Kaylee, going back to 99 and 2000 and the tech bubble there, I think it's safe to say that most people will say it's very different. You have companies that actually are very profitable, selling lots of goods and services, lots of revenue growth, and we are increasingly becoming, I think of Dave and some of the charts he does, we are increasingly becoming a society that is all about these big tech names.
Yeah, you just kind of run with the crowd that's winning, right? But you bring up the revenue, the profitability. I look at a stock like Tesla, which is up more than 400% this year. And I feel like this is what people are looking at when they talk about tech bubbles. Because yes, it's been profitable for 5 straight quarters, but not by a large amount, and it's also largely due to credits that they get for buying and selling carbon emissions credits with other auto companies. So it's kind of those numbers that I think strike a chord with some people and call a lot of attention to just the rally some of these names have seen.
Well, and in terms of what I think it sounds like Einhorn is bringing attention to is he talks about an IPO mania. Those are his words, and huge market concentrations in a small group of stocks or a single sector with extraordinary valuations and incredible trading volumes in speculative instruments as signs of a bubble. So I think he's probably looking at some of those names, it sounds like, and maybe adjusting his book, or at least short book, when it comes to those names. So we'll keep an eye on him. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Mixed Tuesday, the Dow, the S&P lower, NASDAQ is higher, but the S&P bouncing off the lows of the day, very close to those lows right now. Let's head right over to the first word breaking news desk for today's afternoon call, and here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed today on this busy day for earnings. Dow's currently down 192 points. S&P's dropped 9. NASDAQ is higher by 40. The U.S. 10-year yield at 0.77%. Gold trading higher by 6. Oil gains 2%. And transports fall 175 points. Among the main 11 S&P sectors, leaders were tech, telecom, and utilities, while industrials, financials, and energy led to the downside. Leaders to the upside in the Dow, Salesforce and Microsoft, while Caterpillar fell 3.7% after its numbers. And also after earnings, F5 Networks gained 8.6%. Franklin Resources plunged 12%. And Eli Lilly dropped 6%. In other news, TikTok announced a global partnership with Shopify. And in deal news, AMD agreed to buy chipmaker Xilinx for $35 billion in stock. And LVMH and Tiffany are said to discuss a price cut for their $16 billion deal. Wrapping things up, Microsoft reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Kaylee Lines on this Tuesday. And in this week's edition of Bloomberg Business Week Small Business Survival Guide, this might catch you off guard. And it's once again about someone pivoting to stay alive during the virus and in the process really shaking up an industry. Let's get into it with Bloomberg News editor Dimitra Kesanidis. She's on the phone in New York City along with Adela Colvin, owner of Lola Bean Yarn Company. She joins us on the phone from Georgia. Dimitra, this is a story. It's just the kind I love, and it's just such a story that is in kind of the true Business Week vein.
Yeah, it's a great story. It was brought to us by a freelancer named Lauren Feldman, and it's a story about, really being true to yourself in your business, not shying away from who you are. The yarn industry has been traditionally quite white and not very diverse, and over the years, attempts to make it more diverse, certainly have taken off. But Adela faced a very unique situation from an experience she had once when she went into a store on her own for the first time, and then a whole process that she went through to a point where she realized she had to really own sort of who she is and what she wants to do. So I'll throw it to Adela to tell us about the moment when she decided to put Lola, her daughter, on the label of her business, and really be very honest about, I am a Black woman running this business, and this is who I am, and it doesn't mean that my business is any less or any different than any other great yarn business out there. Hi, Adela.
Hi. Hi, how are you?
So tell us, there was a moment, you had a business before Lola Bean, and you deliberately didn't want people to associate it as a Black-owned business, and then your daughter was born.
Absolutely.
And tell us about the change that you experienced then.
Well, prior to, her being born, I did have a business, and I did not put myself out there into the forefront because I felt that if people were to see my face and see that I was a Black woman, that they would think that the services I had to offer were inadequate, less than, or not worth what they actually are, because I'm a Black woman and how Black people are perceived. And it was, once I had my daughter, looking at her and wanting to make sure that I instill, a sense of self, a sense of pride, just let her know that, she is beautiful, she is worthy. And I wanted to let the rest of the world know that. And that's how the logo was birthed.
And it was received. I mean, you shared with us, tell us a little bit about just the reception that you got, when that happened, after that happened, people that came to you and reacted to realizing your business was a Black-owned business.
The reception was really, really warm. People took to it right away. More specifically, Black makers and crafters and other non-white folks in our industry would approach me about how beautiful it was, and I'd have people coming up to me in tears. We waited so long, to see a Black face, for us to be represented, and you have no idea how this little logo, has changed things for us, and you're starting to see more and more Black crafters come out into the forefront. It was almost like the knitting bat signal, like, hey, I'm here,
Right.
You can all come out, and it's just, now everybody knows Bean. When they see the logo, they know Lola Bean.
You mentioned, Black-owned businesses and the support. I feel like a lot of those businesses have seen there's been a real drive to support Black-owned businesses just as a result of, the kind of reckoning we're having in the year 2020. How has that been for you? How has that changed your business?
It has changed it dramatically. I initially had one wholesale account in Lincoln, Nebraska, and jumped up to something like over 30. I've had to move my family, out of the house we were in into a bigger house and use this house for work. It can be a little overwhelming, especially when, you're not used to doing that kind of volume. You're not used to that kind of attention, and also trying to figure out who's who is genuinely there to support you and wants to see you succeed, or who's just trying to capitalize, off of this movement in this moment.
What's your advice? Just got about 40 seconds here, Adela, in terms of, Black business owners, entrepreneurs out there. It can be tough to try and get a business going. What would be, a piece of advice to them, just quickly?
Don't give up. Stay true to yourself. And if they won't let you sit at the table, make your own.
Good advice, really good advice. Thank you so much, and we wish you well. Adela Colvin, owner of Lola Bean Yarn Company, on the phone from Georgia, along with our Bloomberg News editor, Dimitra Kesanides, on the phone in New York City. And Kaylee, we've had so many different conversations here on Bloomberg Business Week just about the inability for minority business owners to access capital and support in terms of getting a business off the ground. So it's great to see the progress she has made.
Yeah, and I would encourage everyone to read this story because it also goes into those who have helped her along the way. And it's not just a story of women helping women. It's a story of 3 Black women helping each other. And it's a really great read. I would encourage everyone to check it out.
The community support, the role of social media, like it all just has certainly a role in this. So be sure to go to Bloomberg.com and check out that story on Bloomberg Business Week. You're listening to Bloomberg Business Week on this Tuesday. Kaylee Lyons, Carol Masser, and we are Bloomberg Radio.
To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, Kaylee, you've been going home and you've been studying music, have you not?
I will say I intend to be more prepared to hear Dave Wilson's song today than I
Is that
was
a
yesterday.
No? Is that a no? Or you're more prepared?
You know, I may have done some Google searching.
Just be ready to Google search now. All right, we're going to get to the chart of the day, of course, set up by a wonderful song of the day chosen by our own Dave Wilson. We'll get to that in a moment. Right now, back to Charlie Pellet. 29 minutes to go in the trading day, Charlie.
Indeed, we've got the S&P lower, the Dow lower, NASDAQ pushing higher. A lot of big tech news today in terms of tech deals. Let's begin with the biggest, $35 billion. Xilinx being bought by AMD. Xilinx shares are up now by 8.55%. AMD, though, down 4.5%. And Apple acquired a startup specializing in advanced artificial intelligence and computer vision technology that may help the iPhone maker improve its own AI across a number of apps and services. The Cupertino-based tech giant did acquire Barcelona-based Xilinx earlier this year. Apple shares, they are pushing higher now, up by 1.4%. Again, technology is advancing. The NASDAQ 100 index up by 0.8%. The Dow, as I mentioned, lower by 139. S&P down 2 points, and NASDAQ higher by 82. 10-year up 7/32. 10-year yield 0.77%. We've got gold up 0.2%, 19.06 the ounce, and West Texas Intermediate crude up 2.4%, 39.50 a barrel on West Texas Intermediate crude. Pfizer says a late-stage trial of its vaccine had not yet reached a key milestone that would help researchers determine how well it protects people from COVID-19. Pfizer shares after earnings this morning down 1%. The news about its vaccine trial came hours after Lilly said a U.S.-run clinical trial of an antibody therapy will end. Lilly shares, they're tumbling now by 6.2%. Merck also reported earnings this morning. Merck is down by 0.6%. Deaths per day from the coronavirus in the U.S. are on the rise again, just as health experts had feared, and cases are climbing in just about every state. Dr. Amish Aldalja is senior scholar at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
So the key thing is, even if you have pandemic fatigue, the hospitals still have to take care of patients with COVID, and we want to make sure. That's what bending the curve was all about, or flattening the curve, was trying to keep it below hospital capacity. And sadly, many places in this country do not have the capacity to deal with these cases. And the same is true in Europe, for example, and that's when you see public health interventions being made.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP. And we have got the Dow, the S&P trading lower. NASDAQ is higher. Again, recapping, the S&P is down 4, a drop of 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you. Choppy day indeed. This is Bloomberg.
So, I love it. I want to be elected. Is that what you said? Charlie Pellet, is this The Who?
I'm going to guess yes for sure that is The Who, but you know what? The person who answered that for sure,
Oh, did I just put
Dave
in Charlie?
Wilson.
Sorry, Charlie. I was trying to make this.
Sorry.
It's not. It isn't.
But, you know, when you think about The Who's classic era, it was the 70s, and so was this artist's classic era.
So a single artist. Okay.
Well, he had a band behind him.
Okay.
But anyway.
Was it called The Elected? No. I don't know.
This one's throwing me for a loop.
I do not know. And Charlie Pellet couldn't help us either, huh?
I don't have a clue. I mean, Dave Wilson goes so deep so often.
Oh, is it Alice Cooper?
It is Alice
Whoa!
Cooper.
Carol, did you Google that?
Okay, I did. It did. I know. I grew up with Alice Cooper. I just couldn't. I couldn't place it.
Absolutely.
I did
Oh, and by
cheat.
the way,
Sorry, Kaylee. I put it out there for everyone. It's that's what Google's for.
Yeah.
Alice
Before we
Cooper.
get any further into the proceedings, I have to correct something I said yesterday.
What?
I said that.
Did you
Three
get
Dogs-
something wrong?
Yes, I did. Unfortunate but true. Three Dogs Nights 1, I said, was written by Randy Newman. It was not. It was written by
Dave.
Harry Nilsson.
Okay. I have no idea.
Who, by the way, sang an entire album of Randy Newman songs. Maybe that's the reason for the confusion.
Okay.
In any case, yes, today it's definitely Alice Cooper.
Wait, all right. So, Kaylee, do you even know who Alice Cooper is?
I played the fifth on that one, Carol.
Okay, that would be a no. All right.
All right.
Moving right along. Go
Kaylee,
ahead, Dave.
If you really want to work Google a little bit, look up a band called the Hollywood Vampires.
Oh, just in time for Halloween. I will do that,
Absolutely.
Dave. Thank you very much.
Johnny Depp, Alice Cooper, a bunch of other artists.
But Alice Cooper's legendary for the makeup he had on his face. I mean, also having a very distinct sound and being quite the rocker. But he also, right, Dave? I mean, he was
no
very
question.
distinct.
But anyway, we got to talk about Elected. Why that song? Because, there's all this focus right now. Think about it. What's going to happen to this industry and that industry if Joe Biden wins or if President Trump gets a second term? All that's still going on. But yet, how long does it really matter for? It's a question that Dan Suzuki pretty much asked. He's the Deputy Chief Investment Officer over at Richard Bernstein Advisors. And what he did is he looked back at the last 4 years. You go back to the month after Trump won in November 2016, and what industry groups, if you go through the 11 main ones in the S&P 500, were leading the way? In short, it was financial companies and energy companies.
Right.
And certainly in the past 4 years, they benefited from Trump's approach to policy, in terms of less regulation. And yet, here we are 4 years later, and if you were to start, after that first month ended, and then look at the groups coming into today, energy by far the worst performer, and finance trailing the pack as well. Those are the two worst groups after having been the two best in the first month after the election. So Suzuki's point is basically that profits, not politics, drive markets. I'm quoting there from a note he has up on Bernstein's website. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's also, though, I wonder, Dave, if it was expectations of what a Trump administration was going to do for the energy sector, but that ultimately wasn't done. And you know what I'm saying? So politics do have a role if there's follow-through.
Yeah, but you can argue there has been follow-through to some extent, at least in terms of the easing of environmental restrictions, the efforts to kind of support the oil and gas industry, light hand when it comes to fracking, for example. And yet, these energy stocks are just getting beaten up. I mean, we're seeing, electric cars become more and more important, renewable energy more generally. And that shift is not something that government policy was really able to do much about.
Fair enough. Dave, I got to tell you, I just looked up a photo of Alice Cooper. I might have nightmares tonight.
No, he's really cool. You got to listen to some of his music. All right, Dave Wilson, you're going to be back a little bit later on with your stock of the day. In the meantime, back to World and National News and back to Nancy Lyons in our 99.1 newsroom. Hi, Nancy.
Hey, Carol. Well, there's only a week left for the presidential candidates to convince voters to vote for them. And Morning Consult co-founder Kyle Drop tells Bloomberg, unlike 2016, they're not seeing a lot of shy Trump voters who don't want to reveal their choice to pollsters.
We interviewed a couple thousand voters, asked them these same exact questions online and by phone to really try to understand if voters do provide different answers when they're sharing their views in public or privately. And we found that President Trump and Biden do quite similarly in both setups. So I thought that is really worth noting as we're trying to reduce uncertainty as the process gets even closer to the election.
Drop says in battleground states that are crucial to an electoral college victory, Joe Biden is consistently ahead of President Trump. The World Health Organization's Tedros Ghebreyesus is dismissing claims from White House aide Mark Meadows that the COVID-19 pandemic cannot be controlled.
Controlling transmission is not only the government's responsibility, but it's also the business of each and every individual. So nobody should give up on this. Government should do its share, and our citizens should do their share.
Ghebreyesus says the political division over the pandemic has caused confusion and more deaths. Gulf Coast residents are steeling themselves for yet another hurricane. Zeta has already hit Mexico's Yucatan Peninsula and is predicted to gain strength and to become a hurricane again over the Gulf and make landfall tomorrow night. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. We're still talking about Alice Cooper. We're going to educate you, girl, if we have to. That's real rock.
Whatever you say, Carol.
My brother George was really into Alice Cooper, so I remember growing up with it. Okay, got to talk Wells Fargo. Stock's down 59% this year. We know Charlie Scharf, president and CEO, he's an outsider, but he's still a financial guy, brought in to really right the ship. Wells Fargo really had a culture problem that ended into a client problem. They've got a story. It's among the most read on the Bloomberg for the last 8 hours today. Wells Fargo cutting dozens of fixed income analysts, scaling back how it distributes research to clients. It's part of a push to simplify operations and lower headcount, according to those in the know. Hannah Levitt and Claire Boston has this story. They continue to change that company.
Yeah, well, part of what Charlie Scharf's trying to do is job cutting. That's part of, he wants to slash expenses. Yep, you got to cut somewhere. And so a lot of that is coming through job cuts. And of course, Wells Fargo is really under pressure to do this. They had to slash their dividend earlier this year. So they do face that investor pressure to cut costs so you can retain some of those profits. Therefore, then they can pay out more money to shareholders.
So what's interesting is, and I feel like all of kind of the financial, coming off of the financial crisis, the research model kind of got a redo, if you will, and certainly separating it from the rest of, a bank's activities. But what they're doing at Wells Fargo, their fixed income research department, they're going to shift from a publishing platform which provides analysis on securities and market trends to a broad range of clients, to a desk analyst and strategy model, according to a spokeswoman at the company. So, kind of changing their model. But you're right, it's all about, listen, they got to figure out how to right this ship, and they've got to figure out how to cut costs.
Right. And of course, we also have MiFID to think about when it comes to research in Europe. That has had an impact on research desks across Wall Street, but really banks in general. So research doesn't seem like the place you want to be on Wall Street, at least for the moment.
Well, right. It costs a lot more in terms of making sure that you're hitting all the regulations when it comes to research. And so they're looking for ways to kind of, make it a more profitable business. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P lower, NASDAQ is higher. Microsoft reports after the closing bell. Microsoft shares up now by 2%. Technology shares are rallying after AMD announced it is buying Xilinx for about $35 billion. Xilinx shares up 8.7%. AMD slumping 3.9%. S&P down 4 now. That is a drop of just about 0.1%. Bottom line here, very choppy trading today. We've got the Dow down 179 points, lower by 0.7%. The Dow close to session lows. NASDAQ holding on to an 89-point gain, up by 0.8%. NASDAQ 100 index up by almost 1%. 10-year yield now 0.77%. Gold up 0.3%, higher by 6.10 the ounce at 19.08. West Texas Intermediate crude oil up 2.3%, 39.47 a barrel. So again, recapping here, equities are trading mixed. The Dow, the S&P lower, NASDAQ higher, S&P down 5, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Carol, we're just about 11 minutes away from the closing bell. A fresh headline for the markets to digest with a few minutes left of trading. President Trump, he's speaking at a rally in Michigan right now, saying that it's Nancy Pelosi, the Speaker of the House, that won't approve a stimulus package. Stimulus, just one thing for this market to worry about. But of course, we are a week out from that presidential election. Joining us now on the phone from Austin, Texas, is Brian Yackman. He's the Chief Investment Officer over at YCG Investments. Brian, you say investors are overly focused on the election. I guess my question to you is, why shouldn't they be?
Well, I think that because the truth is that even if you knew the election outcome in advance, you still won't know how to position yourself. So when you look at the last election, and parties aside, consensus was that if Trump was, markets were going to crash, and he was a surprise victory, and the markets did crash in the pre-market.
Right.
But interestingly, even if you had tomorrow's newspaper before everyone else, by the time the market closed, the markets reacted counter to what the consensus had predicted and ended up going up. And so furthermore, like right now, I look at it, there was just a recent report coming out from JP Morgan, and it was a dramatic reversal because it had been, they were saying, hey, look, a blue sweep's going to be the most beneficial outcome from the election. And now in a huge reversal, they're saying, actually, no, if Trump wins in an orderly way, that's the most favorable outcome for equities. And so I guess my point is, who knows? But how the markets react, I still think is unpredictable. And so we just don't pick stocks based on who wins the election. We just think the best approach is to own global champions that we think will yield great results in multiple scenarios.
Well, Brian, you are, and I got to say, your fund, the YCG Enhanced Fund, you guys are great at stock picking. It's in the 95th percentile over the past 5 years. You guys have returned nearly 13% on average annually, according to our Bloomberg data. And you've got some, very well-known brands, household names, whether it's MasterCard, Nike, among your top holdings. Tell us a little bit about some of the stocks you're maybe potentially either adding to the position or you think investors should, take a look at, especially at the current price?
Well, as you mentioned that, just because today they reported, I guess I'll bring up MSCI. It's certainly, its price is not cheap.
It's a top holding, right?
It is a top holding. And when I say it's not cheap from just a PE multiple basis, but recognize that the value of a stock, it's not all about PEs and that all PEs are created equally. This is a business that requires very little capital reinvestment, and yet it still continues to grow. It's a subscription business primarily, and I think that's missed, that that they have massive retention, like 95% retention. And whereas almost all businesses are deflationary over time because of competition, innovation, it drives down pricing after you adjust for inflation. In their case, they can just continually raise prices year after year because it's such a resilient, desirable franchise. So just to make sure that your listeners follow what I'm saying, is MSCI provides international indices or benchmarks. It's the way that the markets communicate about benchmarking performance. So like the S&P, the Dow Jones. And you look at the Dow, I mean, the Dow's over 100 years old. It's probably the most poorly constructed index out there.
Right.
Yet it's still quoted daily and like by minute. And so I guess what I'm saying is the index business is it's a powerful, resilient business, difficult to disrupt. You and I could say, let's go create an identical index to all the MSCI indices, and nobody would pay attention to our indices. And that gives them pricing power and the ability to keep raising prices, and they have a long runway and a huge tailwind at their back. And they just reported today fantastic numbers, and we believe they'll continue to be, that it'll be materially larger many years from now.
It's so true. And Kaylee, I know you probably do this in your, you have in your job on Bloomberg TV, and I certainly, whether it's the emerging markets, they have the developed markets, I often go to them when I want to compare markets around the world. And if you look at the FA page on the Bloomberg that just kind of breaks down their balance sheet. I mean, Brian, this is the MSCI. I mean, they have pretty consistent earnings growth, pretty consistent revenues growth. And like you said, that subscription-based model gives that kind of company visibility.
And nothing about the election has anything to do with their results, right?
Correct. Exactly.
This will keep powering forward. And so I take comfort, and I personally sleep well at night just knowing that we own those kinds of companies. The other thing I'd point out is, I think the market's being overly focused on COVID winners, right? And so, which votes the prices up. And some of the biggest winners from the crisis are not necessarily what I consider the usual suspects.
Right.
Like you look at the recent Netflix results, right?
Yeah.
And they likely pulled forward demand. But we think that the actual winners are sometimes the ones that are less suspecting, but they're such dominant companies with a very bright future that the competitors got hit hard. So I'm thinking of Nike right now, another big holding of ours, and they initially got hit, of course, like everybody else. But in this process, they've now got more bargaining power over all the distributors, like the likes of Foot Locker, et cetera. Their direct-to-consumer channels growing. And here's a company that's basically dominates a global belief network. They've connected their brand to celebrity athletes by spending billions of dollars. They have the most resources to continue to do that. And as the world continues to grow its wealth, that network just becomes stronger day by day as billions are added to the middle class. And so they have built-in pricing power to remain as a reliable status signal. And lots of growth runway in China.
Brian, I want to ask you quickly, in just about 10 minutes' time, we're going to get results from Microsoft, which I notice is one of your holdings. Can you just give me the investment thesis for that name?
Yeah, sure. So with Microsoft,
I just got about 45 seconds, just so that you talk.
Okay, yeah, no, thanks. So I think of them as almost like a tax on business. They've cleverly positioned themselves to become a toll taker. Basically, it's a toll road over which all businesses must pass. And that gives them pricing power again in the subscription side. There's a lot of high switching costs. We're very laser focused on pricing power and a long runway for growth, conservatively capitalized. Microsoft's numbers are clean versus most of the other, almost all their stocks out there. They're clean numbers, clean cash flow, and I still think it's actually very reasonably priced given the future we see there.
Yeah, and we definitely have seen the company kind of recreated under Satya Nadella, so we're going to get into it. Microsoft shares, by the way, up 35% so far in 2020. Brian Yackman, always good to talk names with you, Chief Investment Officer at YCG Investments, joining us on the phone from Austin, Texas. We've got just about 3.5 minutes left to go in today's trading session, kind of bouncing around a little bit. We'll take you down to the closing bell on this Tuesday, right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Tuesday, October 22nd. Folks from Creative Spirit and Voya Financial ringing that closing bell. The Dow, the S&P, both lower. NASDAQ higher today. In fact, S&P closing very close to session lows, down 10 at 33.90. That was a drop of about 0.3%. Dow Industrial slumped 221 points, down 0.8%. NASDAQ rallied 72 points, up by about 0.6%. Tech shares advanced after Advanced Micro Devices announced a $35 billion takeover of Xilinx, helping to blunt concern about the impact of growing coronavirus infections. AMD down 4.1%. Xilinx up today by just about 8.5%. We are awaiting the latest numbers out of Microsoft, and it is a stock that's owned by Brian Yackman, who is the Chief Investment Officer at YCG Investments. He was our guest moments ago right here on Bloomberg Business Week.
Basically, it's a toll road over which all businesses must pass. And that gives them pricing power again. In the subscription side, there's a lot of high switching costs. We're very laser focused on pricing power and a long runway for growth, conservatively capitalized. Microsoft's numbers are clean versus most of the other, almost all their stocks out there. They're clean numbers, clean cash flow, and I still think it's actually very reasonably priced given the future we see there.
And again, we are awaiting the latest Microsoft numbers. We'll have those for you as soon as they hit the Bloomberg. I can tell you that Microsoft shares did advance today by 1.5%. Microsoft, by the way, so far this year is up by 35.2%. Caterpillar failed to give a reassurance that more hangups from the coronavirus pandemic are definitely behind the heavy equipment maker. Caterpillar shares, CAT on the ticker, down today by 3.24%. S&P down 10, a drop there of 0.3%. 10-year, the yield 0.77%, gold up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirring.
On Bloomberg Radio.
All right, it is time to take a look at some of the movers and shakers in the Tuesday trade. Carol Massar along with Kaylee Lyons. Also joining us, of course, is Bloomberg News cross-asset reporter Sarah Ponczek. We'll get to her in just a moment. Let's just dig a little bit deeper into today's trade. Charlie, of course, breaking down those closing numbers. If I take a look at the major industry groups in the S&P 500, only 3 gained some ground today. Consumer discretionary at the top of the pack, up about 0.6%. Communication services also up about that much. Information technology up about 0.5%. The remaining 8 major industry groups in the S&P 500 were down. Industrials at the bottom of the pack down about 2.2%. And a quick check on the S&P 500. We had 121 names. Kaylee higher today, 382 lower, 2 unchanged. So overwhelmingly, investors not looking to take on any kind of risk today.
No, they certainly weren't. We should note that pretty much all of those categories that outperformed today are tech. Communication services, of course, houses Alphabet, Facebook. Consumer discretionary is basically just Amazon. So it was definitely a day of tech outperformance. And on that note, Carol, we do have Microsoft numbers that just crossed the Bloomberg terminal, topping expectations on both the top and bottom line. Revenue coming in around $37 billion, EPS $1.82 a share, versus the estimate of $1.55 a share. So coming in well ahead of what were notably high street expectations, Carol.
Yeah, more personal computing revenue, that was a beat as well. Cloud revenue looks like it was a slight beat as well. Quick check on the stock in the after hours. And we are seeing shares in Microsoft just a tad higher, up about 1%. So we're going to get a little bit more, a deep dive into Microsoft in just a moment. In the meantime, let's bring in Sarah Ponczek, Bloomberg News cross-asset reporter. I'm assuming you've been watching tech all day. What else have you been watching?
I have been watching tech all day, and I want to highlight something with Microsoft just coming out of the gate with those earnings. Cloud revenue up 20% year over year. So yes, they did beat expectations, but just an unbelievable increase. Of course, with people working from home, kids having to do some at-home schooling as well,
The shift to the cloud has really been important. We see that reflected in that earnings report. The options implied move for Microsoft after the close after earnings is about 6.5%. We're nowhere near that right now. Shares just kind of bouncing around a little bit right now, up about 0.5%. It's something just to keep an eye on, especially as we get more information, get into that call. But it's just unbelievable that we continue to see this tech outperformance. Sure, we had seen a little bit of underperformance really since September, since that correction that we did get. But heading into earnings later in the week too, today the biggest adders to the S&P 500, Amazon, Apple, Microsoft, Facebook, Alphabet up there too. All of these companies report this week.
Well, Sarah, I guess my question to you is, okay, we got a big beat from Microsoft. We'll see if we get big beats from the rest of the mega cap cohort later this week. But what we've seen so far this earnings season is that even though more than 80% of companies are beating expectations, they're not really getting rewarded for it. So can we expect tech earnings to be any kind of like substantial upside driver?
It's a great question because if you also look at the sector components, how different companies within different sectors in the S&P 500 have performed post-earnings, tech has actually been your worst performer so far this earnings season. Granted, that doesn't include all of your FANG names, but Netflix was an underperformer after it did report earnings, especially after that subscriber miss. But if you look at the average tech stock in the 24 hours after reporting so far, yes, we have many more to hear from, but on average, a decline of 3%. That is the worst post-earnings performance of any S&P 500 sector, and the average sector or the average stock in general in aggregate has underperformed compared to historical implications too. Now, the question with tech is that, sure, we might continue to see these very strong numbers. They are expected. The markets, investors are expecting these companies to perform well. But the question, and this question was really raised with the likes of Netflix, is was that performance just pulled forward? Is it true that COVID-19 has accelerated a shift to these companies' platforms, and that shift is going to persist at such a high growth rate? Or is it true that instead we have just pulled performance forwards, and at some point we are going to see performance start to flatten out?
I guess it just depends, and I guess it depends on demand going forward. Like, you do wonder, because of the shutdown, Sarah, whether or not there are people that are going to be shifting some of their habits going forward and maybe discovered a new platform, if you will, or doing something online or what have you.
Right, and that's a huge sticking point that investors are grappling with right now. When you talk to portfolio managers about how they're structuring their portfolios for the future, not just the next 6 months, but the next couple of years, the next 5 years, 10 years, for example, you really have to think about if the shift that we have seen in 2020 is one that is here to stay, or as soon as consumers get the chance to go back to their old habits, to go back to their old ways, are we going to see some of this astronomical growth that we have really seen pick up, especially in these tech companies, kind of start to peter out? And it's a really important question.
All right, Microsoft shares now, I think, a little bit lower in the after hours, so we'll continue to track it and talk a bit more about it. Sarah Ponczak, thank you so much. You're listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson. Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson! Hey, Mr. Wilson, your stock of the day. What do you got, Dave?
Shutterstock, Carol. It's a provider of stock photos, videos, and music. The company was founded in 2003 and went public in 2012. The ticker is SSTK. Shutterstock shares climbed as much as sixfold in the first 18 months of trading, and they gave back most of the gain. They've been up and down ever since. Shutterstock has been on the upswing since March. The shares set a 5.5-year high today after third quarter results were well received. Shutterstock's earnings were more than twice the average analyst estimate in the Bloomberg survey. Revenue rose after falling in the first and second quarters. Now, the number of subscribers to Shutterstock's services climbed 39% to top 250,000 for the first time. All this led to Shutterstock's second double-digit percentage gain after earnings in a row. The shares were up today in more than 10%, for sure, actually almost 12%, after having climbed 18% in July.
Stock's up 62% this year, man. It has been on quite a tear. Kaylee, do you use them?
I do not, no.
I don't use them either. Dave, do you use them?
Can't say I do.
Clearly some people do, though, right, Dave?
Exactly.
$250,000 plus.
And more than used to. All right, Dave Wilson, thank you so much. Have a great night. Let's get a check on world and national news for that. Over to Ed Baxter in our San Francisco studio. Hi, Ed.
All right. Hi, Carol. Can do. 1 week away from the traditional U.S. election day, and the candidates and surrogates are out in force. Joe Biden has told a Texas TV station that he thinks he can win the state, Texas. No Democrat has done that in 40 years. Texas is the second largest number of electoral college votes behind California's 55. Biden is out on the trail and focused on the pandemic.
We can and we will control this virus. As president, I will never wave the white flag of surrender.
But Donald Trump is focused on the upper Midwest, which gave him the election in 2016.
The farmers, we got the farmers $28 billion. So we're doing very well, as I understand, in Iowa and in Nebraska.
And in an extraordinary move, former President Barack Obama has been in Florida today, talking jobs.
The economic damage that he inflicted by botching the pandemic response means he will be the first president since Herbert Hoover to actually lose jobs.
Now, speaking of Florida, the Trump campaign has canceled $5.5 million budgeted in Florida and has cut $24 million from its national budget. Bloomberg reports because of shrinking funding. Trump's campaign says it can carry Florida and its 20 electors without the money. California devil winds have slowed a bit today, but Governor Gavin Newsom says over 30 new fires are spawned in the last day, and today is sending his best thoughts to firefighters who remain in critical condition.
Just shows the extraordinary heroism of these men and women that go on the front lines, that quite literally put their lives on the line to protect your property and to protect your lives.
The firefights continue with tens of thousands still evacuated. In San Francisco, I'm Ed Baxter.
Yes, indeed. Ed Baxter, thank you so much. Ed giving us an update, too, on some of the news from the campaign trail, specifically on Florida. And this story, Kaylee, is our most read story on the Bloomberg in the past 60 minutes. And it talks about Florida and how President Trump's campaign has all but pulled its advertising out of Florida, as it stakes its relatively small bank account on the industrial northern states that carried him to victory in 2016. So he's cut $24 million from his national ad budget since the beginning of the fall campaign on Labor Day. The money story, I always love this when it comes to campaign. It's been a tougher one for the president versus what we're seeing with the Biden camp.
Yeah, I mean, at the end of the day, campaigns largely come down to a cash game, right? You need the money to compete, and we know that at the end of September, Joe Biden's war chest was about 3 times larger than President Trump. The president is having a really hard time, it seems, getting money from small money donors. Bloomberg had a great story with some stats out last week that said he's spending 77 cents of each dollar he gets from donors on future fundraising efforts to try and get more money. So it's clearly an area he's struggling in. And in the final days of the race, having to pull back ad buys, not just in any state, but a key swing state that could be critical to the Electoral College is really significant, Carol.
Well, and what we've heard from some of our political contributors is that President Trump cannot get to the White House without Florida, that it's really key. But at least the Trump team seems to be banking now on some of those battleground states, whether it's Michigan, Minnesota, Ohio, and Pennsylvania. Polls show he's down in all those states, but Ohio, where it's effectively even. We know some of these races are really, close. But it is kind of fascinating to see the amount of money, I guess, since Labor Day, or since the beginning of the fall campaign on Labor Day, Vice President Joe Biden has added $197 million. That's real money.
Yeah, so he's ramping up into the final stretch of the race, the president having to pull back. We're going to have to see how that shakes out, especially, as you say, in those swing states where the margins in the polls are a lot more narrow than they are nationally. Yes, nationally, Biden has a comfy 8-point or so lead, but in those states where it really comes down to it really matters, it's not as wide. It's not as wide.
We shall see, right? It sounds like it might come down to the wire. All right, you're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft shares up 1% after hours. First quarter revenue climbed a better than projected 12%, strengthened by corporate demand for cloud computing services to support customers, remote workers, and move more of their business online. Sales up to $37.2 billion. That topped the average analyst estimate of $35.8 billion. Again, Microsoft after hours up by about 1%. Mixed picture on Wall Street today. Tech rallied. The Dow, the S&P both slumped. In fact, the Dow closed at session lows down 222 points, down 0.8%. S&P down 10, a drop of 0.3%. NASDAQ up 72 points today, higher by 0.6%. Tech advanced after Advanced Micro Devices announced that $35 billion takeover of Xilinx. Xilinx up today by 8.6%. AMD down by 4.1%. 10-year yield 0.77%. Gold up 0.3%, 1907 the ounce. And West Texas Intermediate crude up 2.3%, 39.45 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie, setting us up perfectly with those numbers out from Microsoft. The shares of Microsoft right now just about 0.7% higher in after-hours trading. Let's get more on the results. Joining us now on the phone from Chicago is Anurag Rana. He is the Senior Software and IT Services Analyst over at Bloomberg Intelligence. And also from here in New York City on the phone is Austin Carr. He is Bloomberg News Technology Reporter. Anurag, I want to start with you. A nice, healthy beat from Microsoft here. Strong showing on the cloud. Not an all too positive reaction in the shares, though. Why?
I think we're going to find out about guidance on the call. I think that's more important because we have, we have just saw from SAP that things are not good in software world. So we really need to make sure from Microsoft whether SAP was an anomaly or are we looking at broad-based slowdown in some kind of new orders driven by the recent spike in the virus.
Well, and it's interesting too, right? Anurag, if we look at, Microsoft's had quite a run, so there's a lot of expectation about Microsoft and maybe what it might say in the outlook. So any kind of disappointment will be probably perceived as disappointment by investors.
No, I think you're right, because if you look at it, some of these, larger technology stocks have had a great run. The valuations have climbed up because of, the obvious place to hide in such a bad environment where there are other sectors that are not growing at all, and you have a company like Microsoft, the largest company in software, growing in double digits. That's pretty impressive, but the question is, where do we go from here?
So let's talk about it, because someone who wrote a great cover story for Business Week on Microsoft's Nadella Sans, speaking about the CEO who runs the company. It's just amazing what we've seen Microsoft in terms of shifting is Austin Carr. So Austin, come on in on, you may not go line by line when it comes to earnings, but you do look at this company and kind of where it was and where it's gone under Satya Nadella.
Yeah, it's pretty remarkable, this sort of historic shift and turnaround you've seen under Satya. When we were meeting with him last year, what was really fascinating is just how much every conversation was through the lens of cloud. I remember talking to a high-level Microsoft source and just said when Satya took over, things shifted from Windows to cloud, and that's essentially all you heard him talk about. And that's what we're seeing in these earnings today, the sort of fruits of that labor, the shift of many years of reorgs, of products that are positioned for more enterprise clients, and just this slow, quick, you could say, catch up to Amazon AWS and sort of their intelligent commercial cloud.
Right.
And what also strikes me is just how prime they are for this era of the pandemic, with so much work happening from home, with so much business being shifted online, and so much use for products like Microsoft Office.
Yeah, totally. And you brought up Amazon. I thought one of the most interesting parts of that story that you wrote last year was color around the way Nadella has approached the difference between Microsoft and Amazon, positioning Microsoft as more of a partner versus Amazon, which can be a competitor to many companies in many instances. Anurag, I'll throw it to you on that. How is Microsoft positioned versus Amazon and AWS right now?
I think Microsoft has a much more holistic package to offer customers because it is very strong in the application layer as well. The other point is, it's going to all the retailers and saying, listen, I'm going to help you go out and become more digital so that you can fight against Amazon. Walmart is a big partner for them. It's doing work with Kroger. It's been doing work with Boots. So it is the de facto place to go when you go in the retail vertical because nobody wants to work with AWS there. It's going through all the other verticals where Amazon is going and starting a new footprint as we don't want to compete with your business. We want to be a partner to you, and which is why we think you should work with us.
So, I do wonder, Austin, if you were getting on the call with the Microsoft team and Microsoft CEO, someone who has done, like Anurag, deep dives into this company and looked at it as a business and how it shifted, Austin, what would you want to be asking on that call?
I'm curious about how this momentum in cloud is it going to stay this consistent? Is it going to, or are we going to see these big shifts? And how quickly are we going to start catching up to AWS? You've seen, I think according to Gartner, at the end of 2019, AWS share of the market ticked down slightly to around 45%, whereas Microsoft's jumped up to 18%. But it's still the smaller player compared to Amazon. I remember talking to an AWS source who was just telling me that have some respect for the leader, where the New York Yankees and Microsoft is really the Minnesota Twins. No offense to the Twins any Twins fans out there, but I think we do want to see at what point, what threshold we're going to start to make more significant ground in that fight versus AWS, and how much this momentum in cloud can stay up quarter after quarter.
Anurag, you agree, or what would you be asking on that call?
I was going to jump in and say I completely disagree, largely because what Amazon sells is a 35-40% gross margin business. Microsoft's cloud products, Office products, it's Azure products that go into, they are 80% gross margin business in some cases. This is not even in the same realm. So just revenues for the sake of revenues is not that. I mean, I have no problems with AWS. But frankly, when it comes to gross margin dollars, wait a few years. Microsoft is going to be far ahead of Amazon there.
Well, I have to say, it's been fascinating. First of all, I love a little debate, so always good to get different perspectives, but it has been interesting to watch Microsoft shift, and in terms of its focus under the CEO, Satya Nadella. All right, guys, thank you so much. Bloomberg News tech reporter Austin Carr joining us on the phone in New York City, and of course, our Anurag Rana, senior analyst of software and IT services at Bloomberg Intelligence, on the phone from Chicago, and we have seen Microsoft shares moving just a little bit in the after hours. All right, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in DC, Sound On with Kevin Cirilli is coming up next. Coming up next on Business Week, we're going to dig a little bit into the campaign and the election. That is next. This is Bloomberg.
Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, you are listening to Bloomberg Business Week. Carol Masser along with Kaylee Lines, and we definitely have to do a check on politics today.
Yeah, we definitely do. We just saw the president in Michigan for one of his infamous rallies. There's a great story out on the Bloomberg about these rallies in the final stretch of the campaign, and we want to get more on the campaign, how it's going for the president in just a moment, Carol.
All right, we'll do that in just a second. Let's get back to your top business stories. Some of the news after the close. Here is Charlie Pellet.
Hi, thank you very much indeed. The big story, Microsoft first quarter revenue up a better than projected 12%, strengthened by corporate demand for cloud computing services to support customers' remote workers and move more of their business online. Sales in the period ending September 30th up to $37.2 billion, exceeding the $35.8 billion average estimate of analysts polled by Bloomberg. Anurag Rana is a senior software and IT services analyst at Bloomberg Intelligence, and moments ago, right here on Bloomberg Business Week, he told us he is awaiting the Microsoft conference call with analysts.
I think we're going to find out about guidance on the call. I think that's more important because we have, we have just saw from SAP that things are not good in software world. So we really need to make sure from Microsoft whether SAP was an anomaly or are we looking at broad-based slowdown in some kind of new orders driven by the recent spike in the virus.
And you'll recall yesterday, SAP shares plunged 23.2% after hours, looking at Microsoft up now by about 0.5%. Mixed Tuesday for the U.S. stock market. The Dow, the S&P both lower. NASDAQ did advance. Technology shares gained after AMD announced a $35 billion acquisition of Xilinx, helping to blunt concern about the impact of growing coronavirus cases. S&P 500 index, as I mentioned, down 10 today, a drop of 0.3%. 10-year yield 0.77%. Gold up 0.3%, 19.06 the ounce. West Texas Intermediate crude up 1.2%, 39.02 a barrel. BP used a surprise third quarter profit to reassure investors that it is on the road to recovery, while also warning that it will be a long journey. BP shares down 2.7%. ExxonMobil today down 1.6%. Among some of the other major oil names that we follow for you, EOG Resources today down 1%, and Pioneer Natural Resources up 1.2%. Again, recapping, equities mixed. The S&P down 10, a drop of 0.3%. I'm Charlie Pellet. That's the Bloomberg Business Flash.
So check it out. It is 6 days until the U.S. presidential election. We know a lot of people have already been voting. This next half hour, Kaylee, we've got a couple of stories out of the nation's capital, including one on how President Trump is kind of pinning his hopes on big rallies that may actually be going against him.
Yeah, it's a really interesting story out on the Bloomberg. Of course, the president had a rally in Michigan today. He could have as many as 5 a day coming up this weekend with just a week to go until the election. So let's get the latest on that from right on the ground in Washington, D.C. Joining us on the phone from there is Wendy Benjaminson. She is Bloomberg News politics editor. And Wendy, I feel like the thing about these rallies is I don't doubt their energy. I don't doubt the excitement that's there. But I feel like a lot of the people the president is speaking to are just his base, kind of preaching to the choir. Can these rallies do what the president needs to do in reaching other voters that aren't just his base?
Honestly, we don't think so, and nor do most analysts. This is a way for the president to feel the affirmation of his base, to feel their support, and to, like many politicians do, encourage them to get out to vote. Because if they listen to what he says and believe that he's winning, they may stay home and not vote, and that would make things worse. But if they get out and vote, then, there are states where the president is still leading, and they're important states. But no, does it do anything to attract new voters or convince Republicans who are leaning toward Biden to vote for Trump? No, I don't think so.
So, Wendy, let's talk about what we're seeing in terms of the polls. And let's all remember, we were fooled by polls last time in 2016. But what are we seeing when it comes to polls, especially in some of those critical states, those battleground states?
Right. Well, we are being very skeptical because of 2016, as you correctly say. This time, though, pollsters do say that they have reweighted their samples to include more non-college educated white men, which is what they missed in 2016. So having said that, Biden is leading, former Vice President Joe Biden, is leading nationally around 8 points, but we know that that really doesn't mean anything at this point because on Tuesday there will be 50 state elections. And those 50 states will choose, and then they go to the Electoral College, of course, and whoever wins needs 270 Electoral College votes. So the states that we're really watching are Florida, above and beyond, above all else. Florida is the most important state right now. They are tied. Senior citizens are moving away from Trump because of the way they are dissatisfied with how he's handled the coronavirus. And Latinos are moving away from Trump, not less in Florida than other states, but probably not. And, then there's just people who are moving away from Trump. So, but they are tied there. He has a tremendous amount of support in the northern part of the state. And so we'll have to see how election night goes. He's tied in Ohio and Georgia. He's leading slightly in Texas. And then there's those very important blue wall states of Pennsylvania, Michigan, and Wisconsin, where the two of them are just duking it out for the next 5-6 days.
Yeah, and it's so interesting, Wendy. Carol and I were chatting earlier about advertising spending, the president pulling back his ad spending in Florida, focusing on some of those other swing states, the likes of Ohio, et cetera, that you mentioned. If the rallies aren't going to be enough to get the president the voters he needs, the suburban women, the people of color that he would need to win this election, what does he need to do in the next week? And what does Joe Biden need to do in the same vein, what does he need to do?
That is anyone's guess. Well, Joe Biden is being he is traveling, but he's relying on earned media, which is us, essentially, us writing about him and broadcasting his speeches. And he does not have large crowds because he is trying to avoid spreading the virus. Meanwhile, Trump is having these massive rallies, he says outside, but you see lots of people standing shoulder to shoulder without a mask. I think, I don't know if there's anything Trump can do at this point, President Trump. He is, and he may yet pull it out. I have never say that it's over until we've called the race. Right. But he is who he is. He has pretty much said that since the debate. I'm not a standard politician. This is who I am. Sort of love me or not, and he believes most people love him. Joe Biden just needs to if he wants to win, he needs to keep progressive voters engaged in the election. He needs dissatisfied Republicans engaged in the election. Right. And he needs to make sure that people of color, voters who are people of color, turn out for him. And that's why he's spending time in Florida.
I think it's so wise what you said, Wendy. It's, you got to remember, it's 50 state elections, right? And it's all about the Electoral College. That's our system. And so that's what it comes down to. So you've got to remember that when you're reading or checking out the numbers from the national polls. Wendy, you're the best. Wendy Benjaminson, she's Bloomberg News politics editor, joining us on the phone from Washington, D.C. Right now, it's back to world and national news and back to San Francisco and Ed Baxter. Hey, Ed.
Hey, Carol, going to stay on the same theme here. A newly confirmed Supreme Court Justice Amy Coney Barrett is seated will immediately be embroiled in some of the nation's big legal battles that could determine who is the president sworn in from January. You guys talking about 50 states. This could end up again in the Supreme Court, already deliberating pending voting disputes from North Carolina and Pennsylvania, battleground states. And this is a candidate's head into the last week before the traditional election day, although millions, as you guys are talking, of voters have already been cast. Biden saying he may carry Texas now and is running strong in Florida. And picking up on Wendy's point, either of those would be huge for the campaign, and Biden focusing on the elderly.
It's offensive, as when he told us the virus affects virtually nobody, just the elderly with heart conditions. Virtually nobody, just the elderly with heart conditions. As if they don't matter.
Donald Trump, meanwhile, says he's ahead in all the battleground polls, and
we're doing very well. Our poll numbers are phenomenal. Our real poll numbers, not the fake numbers that the media gives, but the real poll numbers are very, very strong.
Meanwhile, Bloomberg reports his campaign is cash-strapped, has pulled $24 million from its national budget, including $5.5 in key Florida. His campaign says he can carry it without it. COVID-19 hospitalizations risen in at least 10 states in the past week, in 32 states. California, Governor Gavin Newsom says potentially a different story.
But nonetheless, we saw weeks and weeks, candidly, months or a month plus of declines, double-digit declines, pretty consistently over those 14-day bands. Now you're seeing modest increases.
In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. Really appreciate it. You're listening to Bloomberg Business Week. Carol Massar along with Kaylee Line. So did you do a bunch of shopping, stocking up your pantry amid the virus?
I tried my best in March. I did not really succeed. I've been here in New York City throughout pretty much the duration of this thing, and in March I went to the Whole Foods across the street from my house. I got a single jar of pasta sauce and gluten-free spaghetti, and that was literally all I could get my hands on.
That's pretty sad. I mean, it was a little crazy, like trying to get groceries or even just get a slot for because we were obviously getting stuff delivered, which is something we'd always done and just took it for granted. It was always easy. And then all of a sudden you couldn't get a slot. And so we had to be on this cycle where we were planning our groceries 3 weeks in advance. And so great story on the Bloomberg. That talks about American consumers who worked their way through all of the things that they had stocked up in their pantry and that they frantically bought back in March. Apparently they're at it again, and food makers, they're ready for it.
Yeah, they're ramping up their production, don't want to get caught flat-footed, capture really all this revenue, all this demand as people do want to fill up their pantries, which they couldn't do last time. I find the story really interesting, especially as we're seeing virus cases resurging across the country. I stocked up on toilet paper and paper towels, other things that I couldn't get last time around that I'm just, as we head into winter, just to play it safe, I am going to load up on these things. And, you do have to hope that there will be food on the shelves if other people go do the same.
And we've talked to various CEOs in the consumer space and, what they've had to do to make sure that their supply chain is in place. And they do anticipate a second wave. So, they are getting kind of ready. And I guess especially as they watch the numbers around it, and it's always interesting to see what people are buying. There's a lot of comfort foods, right? Yeah. A lot of macaroni and cheese, a lot of pasta,
I don't even want to know how many bags of chips I have gone through over the course of this pandemic.
A lot of carbs certainly being bought and eaten during this shutdown. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another shale deal after ours. EQT is buying Chevron's Appalachian shale assets for $735 million as the biggest producer of U.S. natural gas takes advantage of an industry slump to expand. We're continuing to monitor shares of Microsoft after ours. First quarter revenue climbed a better than projected 12%, strengthened by corporate demand for cloud computing services to support customers' remote workers. Microsoft shares after ours, they're up now by just about 0.3%. It was a mixed day on Wall Street. We had the Dow, the S&P both declining. NASDAQ advanced. NASDAQ, the composite index, up 72 points today, up by 0.6%. Tech rallied as AMD agreed to buy Xilinx. Xilinx up 8.6%. AMD tumbled 4.1%. Again, NASDAQ up 0.6%. NASDAQ 100 index up 0.8%. S&P fell 10, down 0.3%. The Dow dropped 222, down 0.8%. 10-year up 10/30 seconds. 10-year yield 0.76%. Gold up 0.3%, 19.06 the ounce. West Texas Intermediate crude up 1%, 38.96 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. A headline just crossing the Bloomberg terminal. Early voting reaching 50.2% of total U.S. ballots cast in 2016. And Kaylee, we know there are now 7 days, really 6 days, until the election officially starts and 48 days until the Electoral College meets. We've got our listeners covered with the latest developments through November 3rd. Today we're looking at some of the implications for the Supreme Court, and that is, Kaylee, if Joe Biden wins the presidency next week.
And as we know, since the nomination of Amy Coney Barrett to succeed the late Justice Ruth Bader Ginsburg, there's been talk from the left wing of the Democratic Party about packing the court, possibly adding more justices to the bench if they retake the White House and Senate. For more than 150 years, the number of justices on the High Court has stood at 9, but still there is a history of packing the court to fit political needs.
Yeah, this is something that came up in the debates. Here to take us through it all is our own Amy Moore. She's reporting from our Bloomberg 99.1 newsroom in the nation's capital.
The most recent attempt to pack the court came in 1937. President Franklin Delano Roosevelt faced a conservative majority on the court, which had spent the past year striking down laws associated with the New Deal. So FDR hatched a plan to transform the High Court.
For each justice over the age of 70, and there were, I think, 6 of them at the time, he would add a new justice to the court. So that meant he was going to massively transform the court and put on loyalists to him.
Noah Feldman is a Bloomberg opinion columnist and Harvard law professor who literally wrote the textbook used in constitutional law classes across the country. He's going to take us through the history of court packing and what it means for today's situation. Back in 1937, FDR's proposal was overwhelmingly voted down by Congress, and no president has tried to increase the number of justices since. But what does the Constitution say on the matter?
The size of the Supreme Court is actually up to Congress to specify by law. That actual number is not in the Constitution.
Turns out the framers were pretty vague on what the court should look like. The Constitution gives the president power to nominate a justice, and the Senate the ability to confirm him or her. Outside of that, the issue is mostly left up to Congress.
The Judiciary Act of 1789, one of the first important laws that was passed, specified the size of the Supreme Court, and they actually started with 6 justices at the time.
From the very beginning, politics played a role in shaping the court. In his lame duck session, President John Adams signed a law reducing the court to 5 justices. The following year, Thomas Jefferson reversed that measure before it could go into effect. Over the next 60 years, Congress mostly tied the number of justices to the number of circuit courts in the rapidly growing country. So in 1863, when the 10th Circuit was created, the court got its 10th justice. After Abraham Lincoln was assassinated, Congress cut the number of justices to 7. Then President Ulysses S. Grant set the number back to 9 under the Judiciary Act of 1869. And that's where things stood until FDR made his push to pack the court 70 years later.
We cannot yield our constitutional destiny to the personal judgment of a few men
FDR was one of the most powerful presidents in history, but his plan ran into two major problems.
The first was that the sitting justices, including moderate and liberal justices, were deeply opposed to it because they thought it would delegitimate the institution. The second is that lots of Democrats, especially in the Senate, were sensitive to the charge that Roosevelt was basically trying to make himself a dictator. The Democrats already controlled the House and the Senate, and they controlled the presidency. And if they also controlled the Supreme Court, there would be no check on his power at all.
FDR ran into strong opposition from members of his own party, including Indiana Senator Frederick Van Nuys.
I shall not be a party to breaking down the checks and balances of the Constitution.
Indiana Representative Sam Pettengill was also a vocal Democratic voice in opposition to FDR's plan.
This is more power than a good man should want or a bad man should have.
President Roosevelt's proposal was defeated in Congress, but that doesn't mean it failed. On the next round of challenges to the New Deal, Justice Owen Roberts left the conservative wing of the court to vote for the president's laws. Roberts never explained the change, but historians speculate it was a sort of compromise to dissuade FDR from trying to pack the court again. Since that effort, no president has made the attempt.
It's really, really, really hard to pack the court. Don't take up a plan to do court packing unless you have a lot of confidence that you have the votes in advance to get it done. It's just extremely hard to do.
So what other options do presidents have to reshape the Supreme Court? One idea is term limits, but Democratic presidential nominee Joe Biden ruled out that option last night, saying he believes in lifetime appointments. Still, one proposal gaining traction is staggered 18-year term limits, so a new justice is confirmed every 2 years. 3 members of Congress have introduced the legislation, but Professor Noah Feldman has his doubts.
To my mind, that represents a very problematic and doubtful reading of the Constitution and of its intent. It doesn't seem to be consistent with our tradition of how we've come to understand Supreme Court tenure.
Ultimately, the remedy for Democrats may be the same as it's ever been. Wait until another seat opens up on the high court.
It's very hard to use ordinary statutory reforms to change an institution that has its roots in the Constitution. If you ask me, is there a mechanism of reform that wouldn't break the institutional capacity of the court? I don't see one at the moment.
So for those hoping a blue wave next week could turn into a Supreme Court majority, it would appear that history, the Constitution, and precedent point to a different path for the nation's highest court. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy, and our thanks to Josh Block and Andrew Satter as well at Bloomberg Law, who contributed to that report. Listen, Kaylee, I feel like it's so interesting. We are living in interesting political times overall, but the question is, I think you have to look at, has the judicial system worked up to this point, the Supreme Court in particular? You know, as we heard from Amy, the roots are in the Constitution, and do we really want to start playing with this? Because then you wonder, will it become increasingly just another political branch of the government?
Right, exactly. You don't want it to be a pawn for politics and whatever parties in control can do with what they will with the court. But I do think it'll be interesting to see what happens with this election in particular, Carol, because this is the first time we've had a justice join the court so close to an election that could ultimately, depending on how it goes, and the issues the president has raised with mail-in balloting, end up in the Supreme Court.
And I think, you know, it's safe to say that some Democrats think it's hypocritical that when President Obama tried to appoint a new justice, the Republicans were against it. So it feels like it's become a much more political part of our government. But gotta love it. I feel like I'm going through, one of my basic history courses, the checks and balances, right? That's supposed to make the system work. I don't know if our forefathers thought it would all play out this way. All right.
Branches.
Yeah, exactly. All right, you're listening to Bloomberg Business Week. Carol Master, Kaylee Lines. Coming up, we've got 2 interesting leaders, one in the corporate space, one in the investment space, but all working for a common good.
Bloomberg World Headquarters. I'm Charlie Pellet. Microsoft shares after hours just turning negative, down 0.2% right now. First quarter revenue climbed up better than projected 12%, strengthened by corporate demand for cloud computing services to support customers' remote workers and move more of their business online. Sales in the period rose to $37.2 billion in the most recent quarter, the one that ended September 30th. That did exceed the $35.8 billion average estimate of analyst poll by Bloomberg, but again, Microsoft shares now lower by about 0.2%. Technology shares advanced today after AMD announced a $35 billion takeover of Xilinx, helping to blunt concern about the impact of growing coronavirus infections. AMD shares lower today by 4.1%. Xilinx surged by 8.6%. S&P down 10, a drop of 0.3%. The Dow down 222, a drop of 0.8%. NASDAQ up 72, a gain of 0.6%. 10-year up 10/30 seconds, 10-year yield 0.76%. Gold 1907.96 the ounce, right now down 3 cents. West Texas Intermediate crude up 1%, 38.93 for a barrel of West Texas Intermediate crude. We are 1 week away from the U.S. presidential election, but Seema Shah, chief strategist at Principal Global Investors, said on Bloomberg Television this morning, don't invest with the outcome in mind.
The thing that we've seen from doing analysis back to 1929 is that you have a couple of months of volatility potentially, but then after that noise, the market returns to the fundamentals. So what are really driving markets? And that's going to next year, it will continue to be the pandemic, it will continue to be central banks, and hopefully fiscal stimulus. And that's what you need to position for. Almost look away from the election for the time being.
Amazon.com says it's going to hire 100,000 people to help meet holiday shopping season demand, half the total of last year after the company dramatically boosted staffing during the pandemic. Last year, Amazon hired 200,000 seasonal employees to handle the rush of orders during the fourth quarter, but this year Amazon has already experienced holiday-like demand. Amazon shares on a down day for the rest of the market. Amazon among the techs advancing. Amazon up today by 2.5%. Recapping equities mix, S&P down 10, a drop of 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
You are listening to Bloomberg Business Week on this Tuesday. Carol Masser along with Kaylee Lyons. And Kaylee, this next hour, we're going to talk about what leaders, investors can and should do to reduce the inequities in our world. It's something that has come up a lot this year amid COVID, amid the racial injustices following multiple killings against blacks, another one in Philadelphia, unfortunately. And also, these inequities have been coming up on the presidential campaign trail.
Yeah, that's absolutely right. I feel like 2020 has opened our eyes to so many issues surrounding inequality, climate change, corporate responsibility, really putting ESG in particular in the spotlight when it comes to investing. So let's have that conversation now. Joining us on the phone from right here in New York City is Jay Lippman. He is the co-founder and president of Ethic, which is a sustainable asset manager. Jay, as I said, a lot of investors pushing toward ESG right now, and it actually seems really sticky. It seems like they really mean it. How has that impacted your business?
Carol, Kelly, thank you for having me. And it's a great question. I think that through 2020, you've seen a huge spike of people understanding that what we're seeing in the news, whether it is COVID, whether it is racial justice, whether it is the wildfires on the West Coast, they do connect to our investment. They're either going to impact the companies we're invested in, or they're going to be impacted by the companies we're invested in, which is one of the reasons that ESG has seen such a dramatic influx in 2020.
Well, talk to us about the dramatic influx that you're seeing, Jay. We've had conversations with you before, and I know we talk often about whether or not it's just more conversation about companies and investors who want to do better versus actually doing better and committing money to ESG causes and initiatives and thinkings.
Yeah, I mean, so much of what we've actually seen in 2020 is people wanting to understand, number one, what their values are, and then how they connect to their portfolios. And so, through the year, we've seen a huge amount of people learning more about how climate connects to their portfolios, the risks that are associated with the companies in their portfolios, which companies might be increasing the risk of further climate change, as well as those companies that are going to be affected by things like the wildfires in California, or more and frequent, intense hurricanes, for example. And then it's people actually taking the next step and making the investment to transition their portfolio to a sustainable version of what they currently had. And that has really driven so much of the asset inflection that we've seen in the space more broadly.
How do you measure these kind of issues in terms of making an investment? Because I feel like companies are getting more transparent. There is that demand for them to get more transparent, but are they transparent enough?
Well, so much of it has to do with what someone prioritizes, because not everyone has the same values, right? People prioritize different things, and then when you seek to understand the impact of your investments, it's only relevant when it's connected to the things that you prioritize. And so if it's something like racial justice, you want to know that you are investing less in companies that are profiting from a broken criminal justice system. You want to know that you are not exacerbating predatory lending as it pertains to pushing more people into poverty and driving more inequality, for example. Or it may just be not investing in companies that are, propagating or exacerbating the environmental racism that has been so prevalent in the country for such a long time. But there are different issues you can prioritize, right? If you prioritize, again, more climate-related issues, then the things that you're going to try to report upon or understand are going to be more related to those climate issues than if your priorities are elsewhere.
Jay, two questions. What are the values that you're increasingly seeing investors prioritize when it comes to ESG? And I'm curious, how do you define outperformance in an ESG portfolio? Is it that companies that are doing the right thing, or is it a combination of doing the right thing and also financially performing?
Well, I mean, we'd be remiss if we didn't talk about, the huge inflection or huge spike in interest in racial justice. And I think that so many of the investors that come to us are really just interested to understand about the systemic nature of the issue, because, you have to look beyond simply looking at diversity and inclusion policies that are very important, but they're not addressing some of the systemic inequities. And as I just talked about, whether it is the criminal justice system and private prisons, whether it is predatory lending that disproportionately affects people of color, whether it is, the air and water pollution that disproportionately affects communities of color because of a historically racist redlining policy, right? People and investors, because they want to learn about racial justice, they want to learn about all of the interconnected nature of those issues. And as a result, what you've seen is a lot of investors transitioning to ESG that has actually, in 2020 more broadly performed incredibly well. And the reason.
But can I ask you something, Jay? How do you measure racial injustice at a company?
Well, this is the thing. There's so many different ways to look at it, right? You can look at the breakdown of race within a company. You can look at hiring and firing policies. You can look at whether they have strong diversity and inclusion policies and procedures. Not only if they have those policies, are they actually following them? Have they been caught out for infractions against those issues in their hiring or firing policy? But also whether the nature of that business, whether how that business is actually set up, exacerbates systemic racial injustices. Right, and there's so many examples of businesses that do so.
So investors are interested in getting invested into businesses that maybe have a better racial record than others. Do you get the sense that they're punishing companies that don't have that?
Well, this is what I think ESG is all about, right? At scale, in success, ESG is about moving, not billions of dollars, but trillions of dollars away from companies that are not being run responsibly across a number of metrics, and to companies that are the more sustainable alternatives, that are being run responsibly. And, what you're seeing in ESG is a matter of trillions of dollars. And this is what's fundamentally changing the cost of capital, to tell those poorly run companies, you better, get in shape. Otherwise, capital is going to be more expensive for you.
Hang on for a second, Jay. We're going to do a little bit of news, and we'll come back and continue this conversation. I am curious, too, if you can drill down into companies that you think are good examples that when it comes to things like racial injustice, that's, they're doing better than others. So I'm curious about some of the specifics. We're going to come back to Jay Lippman, co-founder and president of Ethic, joining us on the phone from New York City. No doubt about it. Kaylee, I feel like I've been talking about ESG and the investment space for a long time. For a long time, it was also, I think, people saw as kind of greenwashing and wasn't really doing anything. But I do feel like we're in a different era.
Yeah, there's a difference between playing lip service and actually doing the thing. And it feels like people are actually doing the thing this time.
All right, we're going to get back to that conversation in just a moment. Let's get back, though, to world and national news. Over to Ed Baxter we go in San Francisco. Hi, Ed.
Hi, Carol. Yeah, Kaylee, it's nice when people do stuff. With 1 week to go, Bloomberg is pushing out a story that early voting has reached over 50% of the total U.S. ballots cast in 2016. Speaking of doing stuff, people are voting. Joe Biden has told a Texas TV station he thinks he can win the state and its 55 electors. No Democrat's done that in 40 years. Biden focused on the pandemic.
We can and we will control this virus. As president, I will never wave the white flag of surrender.
Now, Donald Trump is focused on the upper Midwest, which gave him the 2016 election.
The farmers, we got the farmers $28 billion. So we're doing very well, as I understand, in Iowa and in Nebraska.
Now, the Trump campaign, by the way, has canceled $5.5 million budgeted in Florida, has cut $24 million from its national budget. Bloomberg reports because of shrinking funding now. Now, Trump's campaign says it can carry Florida and its 20 electors without the money. But Bloomberg's Wendy Benjaminson here on Bloomberg Business Week says the president is losing some key demographics.
Senior citizens are moving away from Trump because of the way they are dissatisfied with how he's handled the coronavirus. And Latinos are moving away from Trump, not less in Florida than other states, but probably not.
So 6 days, which will feel like 30. California devil winds have slowed a bit today, but Governor Gavin Newsom says over 30 new fires were spawned, and he's paying tribute to 2 firefighters injured.
Just shows the extraordinary heroism of these men and women that go on the front lines and quite literally put their lives on the line to protect your property and to protect your lives.
This is Bloomberg.
All right. Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Kaylee Lyons. You kidded yesterday, or you kidded earlier about the states you can't go to. Governor Cuomo of the great state of New York is basically saying, yeah, we usually love all you people coming in and staying in our city, but you know what? We don't right now.
Yeah, and if you're lucky enough to live in this city, like I am, you don't get to go basically anywhere. Right now, Carol, there are just 6 states that New Yorkers can travel to and come back without quarantining. And they only represent about 5% of the population in the United States. So that means 95% of the U.S. keep it out of New York. That's what Cuomo's saying.
That's pretty wild. And they just added, I guess, California to that list, which is, a massive state here. You said just 6 states, so Hawaii, yep, come on in. Maine, welcome. New Hampshire, Oregon, Vermont, and Washington are allowed to come into New York City. Listen, we have talked about this, and those loyal listeners to Bloomberg Radio know that it's very basic, and most medical experts will concur that masks, social distancing, and then as soon as you start to see spikes in cases, you've got to kind of lock it down very quickly to keep the virus under control.
Yeah, what I think is so interesting about the New York case in particular, too, Carol, is that there are states immediately around us, Connecticut, New Jersey, that technically, if you look at just the numbers, qualify for these restrictions. But Cuomo is saying, okay, maybe don't travel unless it's absolutely necessary. But I guess at least we're still allowed to cross the river.
It's kind of hard. And, listen, when the virus was at its heights during the spring, New York, New Jersey, Connecticut, even Delaware and surrounding areas, really kind of work together to control the virus because we know there's so much back and forth, especially between New York, New Jersey, and Connecticut, right? Between all the commuters who typically come into the city, there's just so much crossing. And so I think he's trying to figure it out. But I think a lot of folks would say that he's been pretty proactive in controlling COVID-19.
Right. Well, no one wants to repeat what was happening here in the New York area and in the surrounding area back in March, early April, the early innings of this thing. I don't think anyone wants to go back to that.
Yeah, totally agree. This is Bloomberg.